I was 26 when I crossed the line and made my first $1 million and had $1 million net worth. And in 2008, I probably lost 85% of my net worth. Now I'm having to tell my wife and kids, we're selling the houses, we're selling your cars. We got to survive. We got to manage our business. And we picked up everything we had, moved back to Dallas from San Antonio.
Troy Eckard is the CEO of Eckard Enterprises. After facing a major market crash and early failures in drilling ventures, he turned setbacks into long-term success in oil, gas, and wealth management, building a portfolio of over $1.1 billion, over 8,500 wells, and delivering more than $180 million in investor returns and still growing.
How bad was it at its peak negative position?
So I had a group of about 7 different other entrepreneurs I was friends with. 7 out of the 8 of us never made it back. I'm the only one. We just closed a $120 million deal this last week. My first thought as soon as we just closed on it, I go, what's next? What are we buying? What are we doing? You could literally take away all my assets today, just 61 years old. I'll have $1 million business in 24 months. When I hear somebody says, I want to be rich, it's guaranteed failure. But if you talk to somebody who truly wants to be successful, they say, I want to solve a problem. Entrepreneurs have gotten lazy. Give your money to a financial planner. Give your money to here. Do this, do that. Buy Bitcoin. They're investing in things they have no clue about. They're investing for all the wrong reasons, and yet they're still doing it.
What's the biggest lesson you've learned from working and doing transactions with billionaires?
If you can't see it, touch it, kick it, or feel it, I would be scared to invest in it. Here's what I would tell most business owners.
Before we get into this epic interview, I have one quick ask. The data shows that almost 80% of you guys who watch the show aren't yet subscribed. So if you could do me one quick favor and click that subscribe button right now, it would mean the absolute world to us. And with no further ado, enjoy the show.
Hey guys, welcome to this episode of the Passionate Few podcast. Today we have a brand new episode with the man, the myth, the legend himself, the multimillionaire and multi-billion dollar mindset expert, Troy Eckard. Thanks so much for being on the show today, Troy.
Omar, thanks for having me. I appreciate it.
Absolutely, boss. So we've had you on the show before. Grateful that you were able to fly over here in Vegas for round 2. And today I really want to dive into your mindset because you've built this amazing business. You've had this tremendous experience where with over 10,000 plus multimillionaires, multi-billionaires, you've gotten to see quote unquote success behind the scenes. So before we get into today's interview and debunk some of these myths on the mindset that it takes to be successful, can we just dive into a little bit on what does it mean to truly be a millionaire in today's society? How do you define being a millionaire in 2025?
Well, I think the biggest thing for me is the fortunate part of my career is I've had 4 decades of working with millionaires. I started off at 20 working with people that had $1 million plus net worth. And to see the change in that definition as it relates to being a millionaire and what that means as far as financial net worth and financial stability and how that looks like in today's terms in 2025. To me, a millionaire back in the 80s and 90s meant, hey, this person's successful, they've arrived, they've got a net worth that's one of the elite in the country. Today, I would say that a millionaire in 1990 needs to have $10 million today. Mm-hmm. So that finish line has moved substantially, and it's a much different definition than it was 40 years ago. But the mindset is simple. Everybody that I run across, for the general speaking, let's say 95% of the market, they're always thinking about, well, where's the finish line? Where am I going to end up? What kind of financial network do I have? I'm going to sell my practice, my farm, my ranch, my CPA practice. They all have this kind of finish line. But the true successful entrepreneur doesn't have a finish line. And I think that's the mindset. The mindset is, are you reaching a goal? Or is life really the goal? And I think that's the big differential.
They do it for sport.
Yeah, I think so. I think that what I noticed in my most successful partners is they probably couldn't even tell you their net worth. They probably couldn't tell you what cash they had in the bank. Mm-hmm. They're too busy climbing the next mountain. They're too busy. The confidence level is, whatever mountain you tell me to climb, I'll get over it one way or the other. The average millionaire is more about how many dollars do they have in their IRA, how much money they have in the bank. Was the last investment successful? They're limited on new income coming in. So they have kind of it's like a monopoly board. Mm-hmm. There's a certain number of pieces on the board. They know how much money's in the bank, and they play by the rules of the bank. Entrepreneurs are thinking about how to create a brand new monopoly board, and that's the differential.
How old were you when you became a millionaire?
26.
And then how old were you when you lost it? I know you went through a little bit of a journey there and then had to rebuild even bigger. Yep. But how old were you when you first made it and then when you lost it?
So I was 26 when I crossed the line and made my first $1 million and had $1 million net worth. And in 2008, I probably lost 85% of my net worth because of the market correction in 2008. And when you think you're a pretty smart individual, you think you came from nothing, you've got a nice net worth, you're living in the right neighborhood, you're saving money, and then you start to take risks because you feel more safe. And so you do that, and I did that. But in 2008, I had myself positioned in several different asset classes, but they all seemed to get crunched at the same time. I think what really was resonated about 08, it was beyond the norm. Things happened that shouldn't have happened. And if you were lucky enough to be through the turnstile, you were safe. If you were caught in the turnstile, you got pretty well damaged. I got pretty well damaged. Now, the good news is I had the ability and the resilience to figure out what happened. I never missed a payment, never defaulted, but it took a long time to grow out of it. But now on the backside, 17 years later, maybe the net worth is 15 to 20 times what it was before the crash. So I'm pretty happy.
How bad was it at its peak negative position for you financially?
Well,
Just
I went
paint
from,
the picture for the audience.
Well, I'll be candid with everybody in the audience. I mean, I thought I was going into manic depression because I thought, here I was a successful entrepreneur, and now I'm having to tell my wife and kids, we're selling the houses, we're selling your cars I gave you as birthday presents, we're selling everything that we get cash, we got to survive, we got to manage our business, and we picked up everything we had, moved back to Dallas from San Antonio. And so from my family's perspective, it went from being, hey, we're in this really elite group of wealthier people to, man, we may lose every dime we have. The nice part for me, Omar, is it really put my family to the test. I saw my kids and my wife didn't think about themselves at all. What they did is said, what do we have to do to help? And so it created a bond between my family and kids that was, I can't even measure the amount of pride I have in how my kids and my family responded. And as a family, we got together, we grew the business, and now we have Eckard Enterprises, and now we have a super successful company, not because of luck, but because we simply focused, dug in, and did what most true successful entrepreneurs did, said, we have the ingredients. We just need to find out what what are we baking? And what we wanted to bake was a brand new company with a brand new idea, and we took that and ran with it.
And I love the resilience piece from the mindset perspective. Now, switching gears here a little bit, we talked a little bit off camera about some of the misnomers and misconceptions on what it takes to succeed and what it takes to sustainably succeed, right? Some people who want to become millionaires, become a millionaire once or twice over, and then that's it. That's a wrap, right? And it's a race to the bottom. We talked about some people are even month to month at the 7 or 8 figure level, but high level, just for the audience listening, can you paint the picture of how many millionaires and billionaires are in this country, just from a high level context of it?
Yeah, depending on where you search online, I think the last number I looked at, there was about 22 million millionaires in the U.S. as of about a few months ago, but the funnel gets pretty tight. So when you get to a decamillionaire, meaning $10 million net worth, it drops to like 120,000. And then when you get to 25 million or more, it's down to like 20,000. And I believe when you get to the billionaire range, there's less than 2,500 in the U.S. right now. So that funnel gets very tight. And I think the reason it gets so tight is that everybody has in their mind, if I can tell my friends, my neighbors, my parents, my college buddies, hey, I'm a millionaire and I'm living in the right neighborhood and I have the right, Ferrari in the driveway, then everybody believes you're a success. Well, that's good, except the real money makers, those who really look at how they're going to be successful, they don't ever measure it by money. They measure life by the journey. And so what I see in my most successful clients is they don't have a watch. They don't have a 5-day work week. They don't even have retirement. Retirement's not even in their dictionary. What they're saying is there's more mountains I haven't climbed that I'm going to climb. The ones I've already been over, the path that I've taken, the ups and downs that I've gone through, that's just made me a better climber. So they're looking for the next mountain to climb. It's like my wife says, are you ever going to retire? I said, sure, when I take my last breath. I mean, I'll be doing a deal when I'm taking my last breath because it's not the money. I just like finding the arbitrage. I like finding the undetermined value or proposition, and I see that in my most successful clients. So in my world, we deal with 10,000 millionaires a year. Brand new people want to talk to us about what we do. And what I've learned is most of them are very specific about a goal and a financial agenda. The ones I really enjoy are not talking about the agenda. They're talking about what they want to do in 10 years, where I want to be in 2035 and 2045. And that's very, very rare. What's clear is they know with confidence they're always going to be a millionaire. You could eliminate their entire portfolio today, and that guy's going to go from being a doctor to setting up a landscape company. In a year and a half, he's worth $5 million with a landscaping company. That's the rare breed separating millionaires from truly successful entrepreneurs. That's my view.
It's funny you say that because I've interviewed John Paul DeJoria. He's the billionaire founder of Patron Tequila and Paul Mitchell Shampoo and Conditioner. And he was telling me when I asked him a similar question that he said that the most successful people in the world think in longer time horizons.
Yes.
So when you think of billionaires, they think in terms of 2 or 3 or 4 or 5 decades. When you think about dudes who make, hundreds of millions of dollars, they think in terms of a decade or two. Tens of millions, maybe a decade, a couple $1 million a year. Right? People who want to make 10 grand a month, right? They think about the month. And then the lowest paid people in the world talk about their dollar per hour, right? Minimum wage.
Yes.
And so you can literally correlate people's income to the time horizon with which they're associating that income.
Yeah.
So I love that you mentioned that. Now, switching gears here a little bit, when you first started in business, I'm sure that you had this this imagination, this vision for becoming successful. Obviously, you got to the other side of the fence. For people who are watching this, men or women, entrepreneurs listening, and maybe they want to live their dreams and, maximize themselves in business, what's the biggest misconception most people have about what it takes to be a multimillionaire and actually sustain it versus just get there one time, being on this side of the fence?
I think when you talk to people that want to talk about success and a career and financials, the first mistake I hear, and when I hear somebody say, well, what do you want to do? I want to be rich. It's guaranteed failure. It's guaranteed failure because you don't have a plan, you have a dream. And some people will get rich, but they'll do it through ill-gotten gains, crooked lies, Ponzi scheme, right? But if you talk to somebody who truly wants to be successful, they say, I want to solve a problem. I want to find an arbitrage or a niche that's not being currently solved, and I want to solve that problem. And they're extremely focused. They're very linear in their thinking. So the three favorite words I like are no thank you. Hey, would you like to look at this deal? No thank you. Would you like to invest in this? No thank you. Would you like to be a member of this company? No thank you. Why is that? In order for you to be truly the breakout millionaire, you got to have a vision of where you're going, and then you got to put every ounce of your effort into that vision. I mean, you've got to literally eat, sleep, and breathe it. And you got to have noise canceling mindset, which is you're going to have 1,000 people tell you you're not going to succeed. Or have you thought about it doing this way? Have you thought about doing that way? And you go, no, I know where I'm going. I know what I want to do. You can't stop me. It's not going to change. I'm going to stumble, I'm going to trip, and I'm going to fall, but I'm still going to climb that mountain. Mm-hmm. It's incredibly hard to find somebody with that mentality. And I've got some really, really big success stories of partners and investors that have done that. And there's many of them that are very successful. They're worth $5, $10, $15 million, and there's nothing to be ashamed of. Very, very proud of them. Great. The difference, though, is somebody who truly wants to make an impact in their life. They're thinking about life is the board game. Mm-hmm. And my last breath is the last move I made before I took my last breath. That is somebody who's living to do something successful, not basing it on a monetary goal. And that's what the most exciting part about working with all these investors is clearly defining. These folks are playing the game, and they've done really, really well. This guy doesn't want to play Monopoly. He wants to create a brand new Monopoly board, and his mindset is, where's the next mountain I can climb? And I love that. And that's kind of how I feel like I live my life, is I don't look at the money, the chips, the net worth. I look at it and go, that was fun. Let's do it again. I mean, I literally will finish the deal, and the next day I'm like, okay, what's the next thing we're doing? Because I'm excited about the way that went, and now I can do it better next time because I learned something. Mm-hmm. That's what drives me, is just how do I improve?
What's the biggest lesson you've learned from working and doing transactions with billionaires?
Well, one, billionaires are some of the nicest people you ever met. I find is the lower the net worth, the harder they are to deal with. Now, some are incredibly nice. Don't get me wrong. We got clients worth $2 or $3 million, nicest people on the planet. You get to about that $5 to $15 million net worth. Now they think they're pretty important. Now they want to brag about their rich. Now they want to let you know they're important. And I'm going to put this 200 grand with you, so now you should really pay attention to me. What I like about it is when you generally get, I'm going to call it north of 100 million, they don't want anybody to know they're rich. See, the higher your net worth, the quieter you want to be. You don't want to get sued. You don't want somebody jumping in front of your car. You don't want your employees to see. The higher your net worth is, the more humble you get. Mm-hmm. Because what you really want to do is continue to build wealth, do it in a very humble fashion. Not all of them do it, but the billionaires I've been associated with have been the most down-to-earth, just absolutely are the greatest partners you ever have, because they have chosen you. So here's the difference. You don't sell a billionaire. They choose to let you in their circle. That's the difference, right? Mm-hmm. Millionaires are looking for solutions to problems, how to save taxes, how to invest money, how to get into a market they are not in. So they're looking for people to solve their problem. Billionaires don't have problems. What they have is, I got a lot of money. Now I got to figure out who I'm going to let in my inner circle. Mm-hmm. When they let you in their inner circle, they have already vetted you. Not your money, not your back. They vetted you that you're somebody I like and trust. And when you get to that point, you're that billionaire's partner for life. Mm-hmm. I've been very fortunate to have that kind of relationship.
What does it take to build trust with billionaires?
Sincerity, being genuine. So one of my first experience with the first billionaire I had as a partner was Red McCombs with the McCombs family in San Antonio. And by pure happenstance, we ended up being a partner together. And so we were sitting at lunch one day, and we were just having a kind of an introductory to lunch, probably the second time I met him. And we spent an hour and a half in his office eating at his round table. It was his head guy. I think it was his executive VP at the time. And we were having lunch, and we went for a whole hour and a half asking questions back and forth. He's like 85. I'm like 45. And
were you nervous at this time, or you had the
I wasn't nervous at all. Yeah. And I'll tell you why, because it goes to the story. So he's asked me, he says, well, Troy, you're in real estate. You're in oil and gas. You do this. You buy water rights. He goes, you do a lot of the same stuff I do. So he's just asking me all these questions, very just nonchalant. And finally, about an hour and 15 minutes ago, I said, you know what? Lunch is probably long. You probably have a lot of other things to do. I said, I'm going to go ahead and exit. Thank you for lunch. So nice meeting you. Thanks for everything. You're great, philanthropic, great leader of the community. Just nice meeting you. I left. Well, I get a call back from his executive VP a week later, and he goes, hey, Mr. McCombs would like to do business with you. I said, really? Why? He goes, he's never had somebody come to his office that just shared lunch with him to ask questions about himself. You had no agenda. You weren't trying to sell anything. You weren't trying to get an angle. You weren't trying to do anything other than just have an adult conversation with a guy who's very wealthy that everybody wants something from him. That impressed him, that you were so calm and relaxed and confident you didn't need anything from him. Mm-hmm. And so the lesson I learned is people are smart. They know when somebody's got an angle. They know when somebody's trying to get to them. And my recommendation to any entrepreneur out there is if you're genuine about the relationship and you're genuine about the purpose, all the other cards fall in place. Mm-hmm. And that's what I enjoy about doing business with millionaires. You know the millionaire who really just is using you and they look down on you. And then you get the billionaire who just loves the relationship and they're going to invest just as part of the relationship because they want to, or it's not even about investment. It's just they want to talk to you. They want to spend a couple hours at their property. They want to drive in a car and go look at real estate just to shoot the breeze. And you're thinking, this guy has thousands of people that want to talk to him, but he's talking to me for 2 hours. Why is that? Because he enjoys the relationship.
Hey guys, we'll get right back to the video in a sec. But first, quick question. Are you a business owner, coach, or agency owner tired of using a million different software tools to run your business? Well, thanks to today's sponsor, High Level, you don't have to anymore. High Level is the #1 all-in-one marketing and CRM platform built to help you capture leads, automate follow-ups, book appointments, send emails and texts, and most importantly, generate profits all from one place. It's used by thousands of 6, 7, and 8-figure entrepreneurs around the world, just like you, including many of the guests we've interviewed right here on this very show. And yes, I personally use it too for my own business. So whether you're scaling your business or managing clients, High Level helps you save time, close more deals, and grow faster without the tech headaches. And the best part, they're offering a free trial just for our listeners. So why wait? Head to gohighlevel.com using the link below and start building smarter today. A big thanks to High Level for sponsoring this video, and you can click the link below now to get your 30-day free trial instantly. Now, let's get back to the show.
What about the most common denominator amongst why people got into the industries they are to be successful? Like, what are the most common from the thousands you've seen of industries that people actually became successful in, and what ultimately made you pick your industry?
Well, define success. See, so if I'm a doctor, I get my college degree, I go through medical school, I'm a doctor for 25 years and I retire and I'm worth $5, $10, $20 million. That's success. So the definition is it a success based on some kind of definition that society puts, or success based on how did Elon Musk go from PayPal to creating SpaceX? What happened there? They don't even tie together, right? What I find the most interesting is how really successful entrepreneurs and millionaires, they are always looking for the arbitrage. So I had a CPA that had a practice for a lot of years, and one of his clients, a young guy about 35, passed away. His wife came and said, look, Johnny passed away. Need to sell the business. He goes, well, I've been doing your tax work for 5 years. Would you be okay if I made an offer on the business because I know the books and I think I can be fair about the offer? She said, oh, absolutely. So he gave up his entire CPA practice to run that business, and now he's worth $50 million because what he saw was the arbitrage and the opportunity. And I think that's part of where I see most successful, really, really successful entrepreneurs is they're not got their head down like a horse eating hay. Their head's up like a hyena looking over the grass in the African time. Say, where's the next opportunity? Hyenas are funny the way they're built, right? Long front legs, long neck. Why? Because they're staying low in the grass. And all of a sudden they get their head up. Now they can see above everything else saying, where's the opportunity? I'm not saying that really successful people are like hyenas. I'm saying it's the analogy I'm using, which is they're always doing what they do best, which is protecting their assets, making money, building relationships. What really changes, though, is they're always like, what'd you say? Why is that not working that way? Why is it not done this way? They pull into a gas station. A true entrepreneur is not thinking about pumping gas. He's thinking, why is it designed this way? Why is the gas pump hooked? I could make a better handle. What if we did a circle instead of a square? An entrepreneur is thinking every step of the life, the breath he breathes, how can I do something better? And if I can find the piece of the puzzle that's missing, that's going to make the next successful mountain I climb. It's a mindset that's just very rare.
What about in terms of people who build wealth, sustain wealth, grow it, or lose it, right? Because on paper, people who are aspiring to be successful might see people who've made $1 or $2 or $10 million plus. Say you line up 10 people, they're all totally different emotional experiences, totally different marriages, totally different homes, right?
Yep.
They have these unique elements. What are some things you saw behind the scenes that kind of opened your eyes that maybe the audience would be blown away to learn about what it takes? Because most people would assume, oh, if I could just make 10 million bucks, everything else will take care of itself, right?
Yeah.
So what are some things you've seen behind the scenes that kind of might blow people's minds as to like some of the truth?
I think millionaires are like having a boxing match, right? They all look really good in the gym. They work out. They get a college degree. They're a CPA, a farmer, a rancher. They're an engineer. They've got all these professional degrees, and so they walk the path. They spend 10, 20 years. They save. They make money. They get stock options. They're worth $5 or $10 million, right? And then something happens where they get punched right in the nose. A true boxing match. It's not scrimmaging in the gym. You're in the ring of life, and all of a sudden, out of the blue, you get sucker punched. Somebody jumped in to spar with you. They didn't put the mask on, and they sucker punch you and break your nose. I mean, you're bleeding, and you're like, where did that come from?
Mm-hmm.
That's what happened to me in 2008. I mean, I thought life was good. I was about to retire in my mind, mental state of mind. I was thinking I got to get to a certain goal.
How old were you at that time?
Probably 46.
Mm-hmm.
So I'm thinking, I'm getting pretty close to the amount of net worth I thought I would have. I'm pretty comfortable. I can retire if I want.
What was the number at that time? That was your
I wanted to be
number?
at least $15 million. I mean, I grew up dirt poor, so $15 million was an unimaginable number, but $15 million in stocks and bonds and oil and gas, I was going to make enough money I could retire and go pursue something else I wanted to do. Well, I got that sucker punch. I got the 2008 financial crisis, and it punched me, sucker punch, broke my nose, broke my jaw. 3 of the 5 banks I was with went under, and all of a sudden I'm going from being almost retired to like lost 85% of my net worth and just imploded my company. I mean, it was a mess. It was a mess beyond any imagination. So I had a group of about 7 different other entrepreneurs I was friends with, and we all started collaborating, talking to each other a week, trying to support each other. And what I noticed is 7 out of the 8 of us never made it back. I'm the only one.
Wow.
And so they were all really good at the gym. They all had their construction business, their CPA, probably whatever, and they lost 50, 75% of their net worth in the 08 crash, and they never came back. And I analyzed that. I like to do postmortem analysis. I said, why did they make it back? One, they would never look in the mirror and go, the reality is, you're as broke as you've ever been. You've lost half your net worth. You got to start with the fundamentals, which means you got to work hard. You got to put in the overtime. You got to redevelop yourself. You got to re-strategize because you're not anywhere close to where you're. Stop crying. No crying, right?
Mm-hmm.
The second thing that happened is they assumed because who they were, it was going to be given to them again.
Mm.
So that doesn't happen. So it's like a boxer who wins really good in a boxing career for 5 years, and all of a sudden he gets 3 knockouts in a row, and he's the one being knocked out. Everybody goes, oh, he's a has-been. He's washed out. Look at Tyson, right? All of a sudden he's no good. The reality is the best millionaire is one who says, you could literally take away all my assets today. Use me, for example. Let's say a second round. Let's say 08's 08. I make it back. Today's 2025. I lose everything I have. And they say, Troy, your business is gone. You got to start from scratch at 61 years old. Great. I'll have $1 million business in 24 months.
Mm-hmm.
Why? Because I got punched in the face with a sucker punch, and now I know it wasn't what I was doing. It's what's inside of me. What's inside of me is resilience, creativity. You can't stop me. I'm like a roach you can't kill because I know how to do things to make money because I think in macro. So if I did a landscape business, I'd go to a rich neighborhood and I'd say, get me 5 lawnmowers. We're going to mow the entire neighborhood for free. And at the end, I'd say, if you like the job we did, then here's the bill. If you don't like it, I did it for free, and I'll be back next month to do it for free again. I'm confident that within a year, I'll have the entire neighborhood as my customer, and I'm going to be picking up neighborhoods at a time instead of customers at a time. It changed my entire mindset.
Yeah, you start thinking about scale and bigger opportunity.
It's scale, it's opportunity, it's customer base. It's your mindset when you get punched in the nose is, I can always have my nose broken, but I can survive. 95% of most millionaires have never been punched in the nose, and they're getting punched in the nose right now, and they're crawling in the cave like little girls, and they're oh, my net worth's down 20 or 30%. Well, you were 10 million, now you're worth 4 million. You're still $1 million. Stop crying. Rebuild. You made a mistake.
Yeah, and I love that you talk about the idea of offense, right? It's a common theme whether we talk about Bezos, Charlie Munger. We talked about Trump, right? Like even Trump with business, he didn't need to become president of the United States. No. If anything, he put himself in a really bad position with a lot of people because of it, but he believes in climbing that bigger mountain. We recently interviewed Grant Cardone, and he may or may not be announcing that he's running for California governor. He told me everyone told him not to. He doesn't need to. Harms the business more than it helps. His wife, his lawyers, everyone told him not to. But for him, it's a new mountain to climb. So I'm curious, do you think that killer instinct for growth is something that is born into entrepreneurs, or do you think that's something that's more developed, right? The nature versus nurture question, in your experience, having worked with so many of them.
So I'm going to go back to 3rd grade. So my parents moved to a new school. We went to South Texas. I've been going to school predominantly with white kids. My dad got transferred to South Texas. It was about 85, 90% Hispanics on the border. And I go to school. And the very first day of school, I'm walking home on the railroad tracks. First day of school, and I get 3 guys that jump me, beat me up, and throw me down on the railroad track. I get home. I got a cracked tailbone, don't know it. I'm crying like a little girl. My dad comes in. He says, what happened? I said, well, 3 guys jumped me in the tracks, threw me down. I think I got a cracked tailbone. I'm crying like a little girl. He takes out his belt and he gives me 2 spankings with his belt. Now, the average person goes, well, that's just cruelty. Right. And he said, life's tough. You got to learn to get up. So you're going to go tomorrow. You're going to find the toughest guy of the 3, and you're going to engage him in a fight. And I don't care if you lose or not, but you're going to knock his lights out, and you're going to get the first shot first. Yeah. So I did. Ended up punching the guy right in the face. So the third day of school, I get called to the office with my dad, and they're talking about suspending me for starting to fight at school. My dad said, absolutely not. And here's what I told my son to do to defend himself. That resonated with me the rest of my life. It wasn't about getting punched in the face. It wasn't about 3-to-1. Life is 3-to-1. 3 people around you want to see you fail, because the more you fail, the higher they climb. It's like ants on a Cheeto, right? Okay, if a Cheeto's floating in a swimming pool and there's a bunch of ants, they're all going to swim toward the Cheeto, not just to eat it, but to stand on it. And they'll stand on it and kill the other ants to be the top. So that way they get the food and they survive and they don't drown. That's life. So the only way you can be tough enough to be the only ant remaining on top of that Cheeto is you got to learn to get punched in the nose. You get right back up and go, that didn't hurt. And by the way, now I'm on offense. So that's what I had to do. After my 2008 crash, it took me about 2 years to finally figure out what the damage was. And once I figured it out, I go, okay, you can sit here and cry, or you can do what you know how to do, which is you are resilient. You can outwork the market, and you're very smart, but you got to figure out what platform. So I did a lot of self-evaluation. It was a rough 2 or 3 years, but what I did was I recreated myself. And that punch in the face has got me where I'm at today. I see so many of my current clients that are millionaires that have gone through the last 2 years of downturns and inflation, and even lost 20, 30% of their net worth to Ponzi scheme and bad deals. And they're giving up. They're flat giving up. They're not even beginning to take the steps necessary to rebuild. So what they've decided is, I built my net worth. I've been punched in the face. I'm just going to walk around with a crooked nose. I'm not even going to try to straighten it. I've been punched and life is over. And I'm trying to encourage them by saying, no, it's just the beginning point. You can do it again. But that's the difference between being a millionaire, which there's 22 million millionaires in the country, and being part of the 5% who says, you could take it all away today and I'll have it back in 24 months. That is who your MMA fighter, that's who your resilient millionaire is. And the problem is, maybe another 1 or 2 million of the 22 million could be, they just don't have anybody mentoring them. I've had 10, 20,000 millionaires mentor me. When I got kicked in 2008, 2 or 3 of my best clients called me in and said, come have dinner with me. They sat me down and they go, are you broke? I go, no, I still have $1 million. I still got money. He goes, well, are you wounded? Are you going to cry? No, what do you need? I said, I need to figure out a game plan. Well, let's talk about it. And they mentored me and they told me what to do. And then they said, one client, literally, he's 90 years old, he goes, stop sniveling like a girl, pull yourself up by your bootstraps, do it again. You did it once, what's wrong with you? I go, you're right. That was the best 5-minute conversation I had with anybody. Do it again, stop sniveling like a girl.
Hey guys, we'll get right back to this video in a sec, but first, I have a quick question for you. Given that the e-commerce industry is growing by the trillions year over year, have you ever dreamed of owning your own e-commerce business like many of the guests we've had on the show, but maybe you feel stuck on how to start? Well, if so, you're not alone. The truth is, starting and setting up your own online store can be incredibly time-consuming, complicated, and get expensive. Not to mention the hassle of researching top products and staying on top of market trends that make you money. Lucky for you, that's where today's sponsor, StoreBuild.ai, comes in. With StoreBuild.ai, you instantly get a free custom-built, AI-driven store loaded with 20 winning products and a custom theme that can help you generate sales. All you need to do is head to StoreBuild.ai, enter your info, then simply sign up to Shopify for free, choose your store's look and feel, and voila! They'll send you your custom-built store ready to generate sales. The whole process is lightning fast. Whether you're just starting out or want to grow, StoreBuild.ai makes launching an online store easier than ever. So why wait? Visit StoreBuild.ai and in less than 5 minutes, you could have the e-commerce business you've always dreamed of. Thanks to StoreBuild.ai for sponsoring this video, and now let's get back to the show.
It's funny you bring that up too, because on the offense tip, I think so many people expect it to sort of like once they get to a certain level to coast at that level.
Oh, yeah.
Whereas we all know the law of entropy, right? Which is basically that everything in the universe naturally moves towards chaos and disorder, right?
Correct.
Something came out recently with Sam Altman from OpenAI. He said every business is a total disaster behind the scenes in terms of chaos being managed. It's just about if you can have enough profit to manage the chaos, right? Behind the scenes.
That's true.
So it's all chaos behind the scenes. It's just about organizing it. Can you talk a little bit about some of the most common denominators you've seen with people who've actually lost their wealth? Because I'm sure you've seen a lot of people who had money who 5-10 years later didn't. What are the things they didn't do? Is it kind of related to what you were saying? They stopped playing offense? Is it a lot of times bad investments? Is it not watching the dollar? Because usually there's something that people did to make the money that they stopped doing, right, once they had it, right? What got you there will keep you there. So what are some common denominators you've seen about people who actually lost their wealth?
It's having a sore arm, patting yourself on the back. That was my fault. So I did a post analysis. I like to do post analysis on everything. So I went back and reviewed what caused me to have the inability to see the storm coming and what caused me to not be prepared for it. And as I was patting myself on the back, I'm 46. I think I'm worth $15 or $20 million. Life is good. Got a wife, got family, got kids. Everything. I got 4 houses. Life is good. And what I did was I stopped watching. So I have a mantra today that I've adopted because of '08, which is work like you're broke. So even if you have the safest house and the safest tornado shelter, you better check the hinges on the door, because when that tornado comes, it'll suck the door off that tornado shelter, and all that preparing didn't do you any good because you didn't prepare and pay attention. So what I would tell anybody that's looking at this particular segment, and any advice I'd give anybody that has money, every day the wolves are at the door. Every day someone is trying to figure out how you got what you have, what you have successful, so they can embellish or try to steal it from you. Or more importantly, is the open market has a tendency to make everything equalize. So if you have a successful business, somebody else is figuring out a different product, a different methodology, a different way of competing to take your profit, shrink it, and elevate themselves, like those ants crawling on that Cheeto. So the advice I give myself and the advice I give anybody else is, when you have a successful life, net worth, entrepreneur, every day you should get up and go, have I checked the hinges on the door to that tornado shelter? Have I checked my bank account? Have I checked my banking relationship? Have I checked my customer base? You got to ask the really tough questions, because the more enamored you are with yourself, the less you're being critical. The less critical you are, the more holes in your ship you have.
The pride before the fall.
You have to be resilient, because there was a guy named Aubrey McClendon who was a successful billionaire in oil and gas. And he took a lot of chances, and I think he ended up passing away in a car accident. That was questionable, right, what happened, but let's just say he passed away in the car accident. But this was a guy that was the face of risk. I think he was on Time Magazine, the most risky billionaire there is. He was worth $6 or $7 billion. And what you look back over and you analyze it is, he never stopped pushing for what he was doing. But after he fell, after his $6 billion dissipated on some bad trades in the market, it seemed like he just was completely derailed in my observation looking in. And I see that happen with some of my smaller clients. They're up to $10, $20 million. Something happens, and you just look at them, and they're a shell of their former self. Well, that's the guy who was practicing boxing in the practice ring, but he never got punched in the face. So sometimes it takes a punch in the face to see what you're really made of. You know, and I think that's life. And you don't know that till you've been punched in the face.
Yeah, and then you start to sort of then see the patterns and start to see the trends.
The patterns, yeah.
So what about in terms of people who sustain it and grow it? What are some of the investments you see people in terms of psychology and otherwise, right? Because a lot of times investing, you're anticipating some of the things that can go wrong in the future. You're betting against certain market conditions as of current. So what are the things you've seen with people who actually sustain and grow wealth? How are they thinking? How are they investing versus people who just focus on getting it once?
Yeah, I think the number one thing I've seen from most of the successful clients I have is they have a certain amount of money. That's what they call never touch money. This is my money that if I invest in all these other investments and all these other projects and startups and companies and stock market, this is my nest egg. My nest egg is basically the core of who I am and my net worth. It gives me enough resources that if all hell breaks loose, I still have plenty of powder to rebuild myself, right?
And then live off that interest of that principle, basically.
No, it's not even living off of it, to be honest with you. It's saying I have enough dry powder that I still have enough money to bet on new investments if these other 20 fail, right? So what I say, so I have a very good client that he's much older, doesn't invest anymore, but one time he told me about 15 years ago, he said, Troy, I don't want to hurt your feelings. He said, but when I write you this check for $300,000, no offense, but I assume you're going to lose it. and I go, well, that's very encouraging. He goes, no, I assume you're going to lose it because I'm giving you money I can afford to lose. I know you can do a great job. I fully trust you. But what I'm saying to you is it doesn't touch my core. My core is the money that I put together that sustains my lifestyle, my family, my wealth. This is money I can afford to invest. Now, a younger entrepreneur who's not even at $1 million net worth, somebody who's barely $1 million net worth, their core is smaller, but they still have a core. Can I pay my rent? Can I pay my car? Have a little bit of liquidity to rebuild. Everybody should define their core. But the bigger your core, then the more capital you should have, the more cash flow that core kicks off. Then you have to decide, okay, I've grown big enough. I would say 9 out of 10 millionaires, they get a core and then they stop investing. Oh, I'm at 7 million. I'm at 10 million. I'm at 4 million. Well, like I said at the beginning, $10 million is really the new $1 million. So I'm not really that impressed you get to become a decamillionaire. Why? It's not because money doesn't impress me. It's you can't act like you're the biggest stud on the farm if you stay in the stall all day long.
Right.
And so they kind of have this misnomer. You think about it. You put $7 million in the bank, making 4%, you're making $280,000 a year. Big deal, right? What do you need? The idea of true wealth is you have enough money that your money makes you enough money. You live your lifestyle. If you like cigarette boats and Ferraris, then you got to have a lot of money kicking off cash to live that lifestyle. Or you got to keep trading yourself like a cheap hooker until you finally make enough money to keep your net worth.
Right.
I see in the very few 5% of my clients, I see that drive where they're like, this is not about a finish line. This is a game, and I love the game. And the game is, I want to play Monopoly with Omar. I don't want just to win the game. I want all of Omar's properties. I want all of his money, not because I want to say how much money I have, just because I like to win. That's that insatiable desire to do better. We just closed a $100 million deal, $120 million deal this last week. We put it together in 60 days, fully funded in 60 days, and closed on it. My first thought, as soon as we said, hey, we're closed like 4 days ago, we just closed on it, I go, what's next? What are we buying? What are we doing? We've already got another $66 million asset we're putting under contract. We're chasing another $40 million contract. And it's not even the money. I'm not even slowing down to think about what we made or profit. I'm like, great, we bagged it, tagged it, it's in the barn. What's next? You cannot describe that insatiable hunger you have inside of you. Thank God I married the right woman. Thank God I have the right kids, because they're like, dad is dad. He's always trying to change the world, but he's never going to change who he is. You got to love him for who it is. And that's just, I think that's the way true successful entrepreneurs who have that hunger to live every day. They're thinking about the hunt.
Absolutely. Now, you talk about just closing a $100 million deal. What's the biggest negotiation tactic or strategy that you found when it comes to negotiating in transactions at that high level?
Well, I'll tell you what my style is. It's called the negative close. I could be starving to death and I need the job. You have a job and I need that job really bad. And I think I'm qualified, but I don't have the right suit in the interview. I don't have the right shoes. And I walk in and you and I are interviewing and you go, well, tell me why you don't want to work here. I don't know. I want to work here. Tell me why I should work there. I reverse the role. And you're like, no, you came here for an interview. You gave me your resume. I know I did. But my resume's gone to 100 people, and I'm looking at 100 companies, and I'm trying to figure out where I can go in and help you build your business. I want to make more money at your company. I want you to make more money. So I'm a really good asset. I'm a really good tool, but I got 100 people looking at me as the next person they want to hire. Why should I work for your company? And people are like, brassy little son of a gun, right? So I'm negotiating a deal right now with an $8 billion company. We're about 2 weeks away from finishing it. And I tell them every time, I'm like, if you don't close by this date, I'm doing this myself. It's like an $80 million contribution. He's like, well, we're coming in with an $8 billion backer. I go, so? Doesn't impress me. I said, I'll close the deal myself. I'll fund it myself. I'll rock and roll. Nothing scares me. Now, I may be bluffing, and I may be not have the clue, but I think the best negotiation you have is the other party knows you don't have to have it. And I can smell it's called I call it skinny dog, fat dog.
Yeah.
Okay. So I tell people this all the time. Most people lie. And I say, you walk out on your porch one morning, have a cup of coffee, and you see a skinny little scroungy dog on the left side, and you see this fat little Labrador on the right side. And I go, which one would you pet or feed? Oh, I would feed the skinny dog. I go, no, you wouldn't. I say, you're lying. And I tell you why. I tell you why they're lying. I say, when you walk out the door, you assume the fat little dog is lost, and his poor owner's looking for him because he's fat and chubby and has a smile. And the skinny dog, well, nobody likes him. He wants to bite, snip. He probably has mange, and he's no good. Get your butt off my porch. And the fat dog, come here, baby. You're so cute, right? Yeah. And the truth of the matter is, people can smell a skinny dog. And a skinny dog says, either you don't have the skills, you don't have the education, you don't have a good plan, you haven't thought it through, and you're skinny for a reason, because you probably suck at what you do. And so when you go to a negotiation, you act like you need the deal, the other party says, you need that doggy biscuit, I don't. So we're going to make you jump through fiery hoops to get it. So the true success to being an entrepreneur is you say, I could lose I find this with employees. I need my job so bad. Do you really need your job so bad? No, I don't. If my boss has no respect for me and I don't have an opportunity to grow, I'm going to look at my boss and go, you know what? I need to tell you what I feel like as your employee. I want to help you build your company, but A, B, and C is not working for me. How do we make that work for me? You're asking me how you're going to do better at my job? Yeah, I am. Well, you just need to do your job, shut up, get back in your cube. Yep, this will be my last day working. I'm going to go ahead and turn in my resignation. Where are you going to work? I have no clue. But anywhere I work offers more opportunity than you give me. Now, take that to the millionaire mindset. The millionaire needs to say to people, I'm worth $1 million. I'm not broke. I can live for the next year. If I sold everything, think about it this way, Omar. I have clients that are worth $10 million, and they're fretting over they make 6 or 8%. Like, I gotta hope I can make $600,000 this year, or $500,000, or $400,000 on my extra money. And I tell them, I said, what if you just took $200,000 a year out of your $10 million? You got 50 years to live on your own money. You never make another investment. You just take $200,000 a year out of your $10 million and just watch it go down. Why are you saving the $10 million? Well, it's for my kids and my heirs. Your kids, they're going to sell your money, sell your wealth, sell your real estate. They're going to buy a Ferrari and go to Europe for about 6 years and spend your money. And it's the mindset. The mindset is, are you the skinny dog or the fat dog? Not only in getting a job, but in life.
Mm-hmm.
A fat dog is fat for a reason. They're comfortable, right? That lazy old lab laying on the back porch is comfortable, right? That skinny dog, he'll chase a rat 2 miles to get a bite. That's what your billionaires do. The billionaire says, I grew up broke. I grew up with nothing. I grew up without any ideas. And when I got to that level, I'm the skinny dog because I'm always paying attention. Anything moves, I'm going to attack it.
Mm-hmm.
You got to be the skinny dog. You got to be the skinny dog, not in the way you pitch. You got to be the skinny dog in that you're alert. But if you come to me and go, I need that 100 grand. I need that investment account. I need to close that deal. Oh, you do really? Now who's in control? So the most successful negotiation tool I know of is to be able to say, with truthness, I can walk away and I just don't give a damn.
Mm-hmm. That
makes you powerful.
That's powerful. What about before? Like, was there any negotiating tactics used earlier in your career or strategies that you were like, okay, I'm not doing that again?
I think what happens in life, you start narrowing your scope, right?
Mm-hmm.
So when you're young and you think you're smart and you're brilliant, you get some early success in your career, you're the jack of all trades. I can do everything. I can negotiate this. I can buy an oil well. I can buy real estate. I can negotiate buying a business. And then all of a sudden, it's like a mousetrap. You stick your finger out and go, slap. Oh, God, that hurt. And I can give you dozens of examples, not only with myself, but with my clients about how I'm a great engineer, but I tried to become a great stock trader. Boom, loses their money. Hey, I'm a great dentist, but I bought this real estate, a bad deal. And I think what happens is that you begin to develop a process of narrowing your scope as a result of life experiences. But I think the only way you get life experiences, you have to be aggressively pursuing life experiences. Now that's contradictory, right?
Mm-hmm.
You've got to be on the front line participating. You've got to get information. You've got to listen to smart people. Sometimes you got to listen to dumb people. Why? A ruler has 0 and it has 12. I got to know the dumbest guy in the room and the smartest guy in the room so I know what the average is, and I want to lean more toward the smart guy in the room.
Mm-hmm.
So I would say the thing I learned early in my career is you tried this and you had no clue what you're doing, and that cost you. Okay, you got to do a post-analysis. What was it about that caused you to lose? Well, I didn't study the product. I didn't study the industry. I didn't do my homework. I considered that 100 grand not being that big part of my net worth. I disrespected my money, so I lost it. As you get older and you narrow your scope, you say, I'm really good at these 4 things. And so my 3 favorite words are, no, thank you. So now people call me all the time for investment. Hey, I want to do this. I want to start. I go, hey, wish you the best of luck. No, thank you. They're like, what do you mean? I have no interest at all. You don't want to hear about it? I do not want to hear about it. I don't want to see the PowerPoint. I don't want to see the pitch sheet, nothing. But I do wish you well. If I can ever help you in something else, give me a shout. So you're very polite about it. You just say, no, thank you. I see that in my greatest, most successful clients is they've learned over 10, 20, 30 years, no thank you, saves them hundreds of millions of dollars in losses. It's a polite way of saying, no, don't take a hike.
What was the hardest lesson for you to learn in business that maybe was a stubborn lesson you tried to fight against that maybe you finally had to accept down the road with time? Was there anything like that comes to mind?
Yeah, the value of having experts around you. So you would always look at like CPAs, lawyers, people working in your company. And what I learned is you need to pay a premium, not because they charge $1,200 an hour as a lawyer. You need to find the best lawyer that knows securities laws, the best lawyer that knows litigation, the best lawyer that knows contract. What you have to do is surround yourself with the smartest, brightest minds because they're going to be really good at what they do. You're really good at what you do. They can't do what you do, and you can't do what they do. So I have surrounded myself since I rebuilt my company the last 10 years, I've surrounded myself with some of the smartest people I know in legal and accounting and across every asset class. My staff I have now, we go out and find the smartest geologist we know. We don't care what he costs because that he'll save you his entire salary with one right decision.
Mm-hmm.
You surround yourself with the smartest people. You stop going on other people's podcasts because you go, this guy that's doing this podcast is not respecting the market. So do you want people to resonate you with this audience and this podcaster, or do you want to come talk to Omar, who has a tremendous following and people respect what he does? So what you do is you narrow the scope of what you look at, and then what you begin to do is you start respecting your time by saying, I'm going to be very selective with who I bring into my inner circle, extremely selective.
Mm-hmm.
And the last thing I would say that I think is what I'm working every day is humility. I wake up every day and I say to myself, you went through hell and back, but here's where you're at today. But if you're not watching every single day, you can go right back there. So I get up and I'm up at 5. I'm at the office by 6. I'm cranking like a maniac. Everybody's like, this guy is not slowed down at 61. I'm like, absolutely not. Because why? You call it luck, you call it God's blessings, you call it learning from your lessons, whatever you call it, life changes in a dramatic instance. And you've got to be prepared for that. And if you're not, that means every day you go to the gym, the business gym.
Mm-hmm.
You're reading what's happening in the market. You're listening to what other millionaires did right and wrong. You're learning the success stories. And you're every single day, you're sharpening your tools saying, I don't know when the fight's going to break out, but if it does, I am well prepared.
Warren Buffett has a famous line where he says, the best time to invest is when everybody's retracting.
Yeah.
And the worst time, too, is when everybody's trying to invest, right? When there's blood in the streets is the best time to invest.
Well, you have wolves and you have sheep, right?
Mm-hmm.
So what happens is the shepherd says, okay, all you sheep should go this way. That's the Fed. That's Powell. That's President Trump. And they're all saying, invest in stocks. Don't worry, inflation's coming down. Don't worry, the interest rate's coming down. And be careful with oil and gas because I'm going to push it down to 55. Be careful with this, and this. And they're orchestrating like a shepherd where all the investors are supposed to go like sheep. And those who are not sheep are saying, wait a minute, is that the wolf making a call? Trying to get us to follow that way?
Mm-hmm.
What I really want to do is I don't want to follow the sheep because when they go in there, they get sheared. They come out without any wool on their backs, and they're all beat up, and some of them go to slaughter. What I want to do is say, I want to ask the question that most successful entrepreneurs ask, why? Hey, I want you to invest in this project. Why? I want to ask the who. Who's behind it? Who's involved? Who's the expert? You got to ask the difficult questions to succeed in life. And those questions that you ask are going to get you kicked out of most deals. So that goes back to being the skinny dog or the fat dog,
Mm-hmm.
right? When you ask questions, you're saying, I'm not going to just follow you like a sheep and just do what you tell me to do. I'm going to go back and say, why? Why does President Trump say, drill, baby, drill? Because he's trying to convince the American economy and consumers and all the different markets that don't worry, oil is going to be cheap. I'm going to get these good old boys to drill. They'll have more than enough supply. Oil price is going to stay suppressed like it did in my first term. The answer is no, it's not, because those that are in oil and gas, including the Exxon CEO, came out and says it's not drill baby drill, it's survive baby survive. We're not going to drill. So the underlying pinning to the current economy is going to be real simple. Energy keeps the economy going. If it's cheap, we grow. If it's high, we die.
Mm-hmm.
And I think at this point in time, the biggest catalyst to future inflation and entrepreneurs looking to buy businesses, what's energy going to do? So you've got to really peel the onion back. And I think that's where most entrepreneurs get very lazy. Like, hey, did you hear the report in the news? What's happening? No, I didn't see that. No, I didn't see that. I didn't see that. You realize your money's being affected every day by what's going on a global basis, every day. How's it going to happen? So I would simply say to most entrepreneurs, in order for you to maintain your skills, you get up every morning like you go to the gym and like you walk and you jog, and every day you get up and go, I got to see what the playing field looks like to defend my position or to be offensive in my position.
How do you find yourself being able to identify your superpowers? One of the most common denominators I've learned from a lot of successful people is focusing on your core superpower. Naturally in business, when you start, you're the accountant, you're the marketer, you got your, you wear every hat in the business, and then you grow your team little by little. How important do you find successful people actually stick to their core functions and then delegate the rest to other people they trust? Like, how important is that for somebody listening? And maybe it's just their first foray into understanding that, right?
I'm going to give you a simple answer.
Hire. Yeah.
Ready? When you sit down as a business owner and you say, can I replace my CPA? Yep. Can I replace my CFO? Yep. Can I replace my salesman? Yep. What's the one role I do that cannot be replaced? Okay, that's your core competency.
Mm-hmm.
So if you're the Elon Musk and you're the brains behind the operation, he's got to define what he's really good at, right? Maybe he's the macro thinker, thinking about where we're going to be in 20 years and how we're going to build SpaceX and Tesla. But then he says, I'm really good at that. I can be good at these other things, but now I've diluted my intellectual capabilities. I'm doing 20% of these 5 things, but this is what I'm really good at, and I can't replace it.
Mm-hmm.
That's your core competency. So I had to do that. I had to decide 8 years ago, I said, what are you really good at? I'm really good at the vision, and I'm really good at raising capital. No one else can do it. But I can hire really good IT people. I can hire really good accountants. I can hire all these other positions, and I can hire the very best of the best, but they can't do what I do. So my core competency was X.
Mm-hmm.
And that to me is how you do a breakout company.
Mm-hmm.
When you finally realize what's the one component you have that nobody else can replace, you've defined your core competency.
And when you talk about hundreds of millions of dollars in transactions, $1 billion plus, I know you're working on massive deals right now. Obviously, you need an A-plus team like you mentioned. What's your best advice when it comes to hiring A-plus players, hiring, firing, and retaining talent? Because, the most common denominator from me interviewing successful people, when I ask them the biggest challenge in their business, it's not revenue, it's not marketing, it's not scale, it's people.
Yeah.
It's finding quality people at every level in business. So what's been your best advice when hiring and retaining and firing when necessary A-plus talent in the business?
So the first thing on the hiring is everybody can lie for 8 hours, and after 8 hours, they can't tell a lie. So we had the practice where you'd hire somebody based on a resume. They show up in a suit and tie. They tell you they've done X, Y, and Z.
Yeah.
They behave themselves for 90 days in Texas, and then they got a full-time job, and if you fire them, they get benefits, right? So you know that you're getting the very best of who they are in that interview. So the idea is you got to lay out your vision, and then you've got to present questions in that interview or along that path of that courting relationship. You got to put questions to them that allows a subjective answer. So you can't say, is it a yes or no? Like at your last job where you fired, you got to ask, like, if we hired you today, how could you expand your skills? They don't know, right? So the 3 or 4 things we learned is when you're a fast-moving train and you have a successful company, everybody wants to grab your apron string and be a part of it.
Right.
And they'll say whatever they have to be part of it. What we've had to do is we've allowed each one of our departments to decide what that characteristic is of the person that's coming to that department that will fit the social environment and not just the skills of the work, but how do they fit in the group. And then what we did really successful at our company is we put internal teams together, and we started doing cross relationships between accounting and marketing and events and all the different divisions. We said, okay, every month each team's going to get together, and we're going to pay for have an outside event. We'll pay for once a month lunch. Everybody's got to participate. And now every facet of our company knows each other. So now when we hire new people, we'll actually go in like our marketing department. We're bringing on a new marketing person. We want the 3 people in marketing to sit in on the interview, ask the question, listen to the answers. And then when they leave, they go, got great skills, doesn't fit our personality, doesn't fit what we want. They have a different agenda. They're just here as a stepping stool to the next leapfrog they're going to go. And when you start allowing the power of your current people that you trust that are part of your team to help you recruit like-minded people, you get a very, very sharp response. The other thing we learned is that you got to be incredibly quick to discharge or relieve people from their duties of people who do not fit your system. So we'll hire somebody. We literally had this happen about a month ago. We hired 3 brand new people. One person didn't last to pass the first day in walking around the office.
No way.
Just not even the first day, gone.
What did they do that got them fired?
They're in there. They're walking around. I have our HR person introduce them. They're like, yeah, you keep walking. I'm going to grab myself a bagel in the kitchen and get myself a drink, and I'll catch up with you in a minute. Tells the HR person on the first day of work, I'm more interested in a bagel than learning about the company. We let them go that day. You're not our person. Why would you disrespect the company in your first day? I'd be on my best behavior my first day.
Right.
Next one said, hey, I'm here. I'm going to be part of this department. Within 3 days, we had to terminate her. Why? Because we found that immediately was on her phone. We looked at her time on the screen, spending 4 out of 8 hours doing that thing. Didn't even wait for 72 hours to be there.
Yeah.
Simply show left alone, this is your devices. Now, I'm using examples, but it was more the correlation between, here's what I would tell most business owners, right? And I would tell most entrepreneurs. Always have that noise canceling system in place. But you got to teach your team to have the same kind of noise canceling, which is we have a mission. We're going from here to here, and that's going to be a tough trek across the Andes Mountains. But we're going from here to here, and we got to have the best people. We got to have the best people packing and carrying and guides. And anybody that resonates without having that same passion or compassion, they actually become more cargo you're carrying. Your wagon gets heavier because I'm having to every day convince them, help us. You got to do your job. You don't want your wagon heavier. You want your wagon lighter by them saying, I know where they're going, so let me push before they ask me to push.
You want to accelerate velocity, yeah.
But this is how entrepreneurs think. This is how successful people think. They surround themselves. You can't be intimidated as an entrepreneur. I want to hire a CFO that's smarter than me at numbers. I want to hire a chief operating officer that's smarter than me in my operations. I want a better salesman than I am that can outsell me because why? If I hire people that are better at what they do individually than what I do, then what it does, it allows me to more focus on the long-term vision than trying to do their individual jobs. A lot of entrepreneurs can't do that. They don't want a smarter dentist. They don't want a smarter engineer in their practice. They don't want a smarter accountant in their CPA firm. Yes, I do. I want the smartest lawyer I can hire. I want the smartest CFO I can hire. I want my team to be gold medal winners from top to bottom.
And then it ends up being dead weight too, because now you allocate the time's resources if they're not to course correcting and fixing and training, and now you're taking away from their core competencies if you don't have the A player up front.
Yeah, and I think one thing I would add to it, we debate this in our own office all the time. We talk about, do you go and share the vision of your company and where you're growing, how you're growing with brand new employees or employees that are fairly new to the company? And my philosophy has been, I do much better when you tell me where I'm going, why I'm going there, how I'm getting there, and what's to be expected when I get there. I remember as a kid, this is back long before the laws were in place, as a 7 or 8 year old kid, you can get in the back windshield and do this to semi trucks and they'd honk their horns. You're literally laying in the windshield, no seat belts, nothing, right? But I used to ask my dad, we'd be taking off and going on a short trip, and I go, where are we going?
Yeah.
I'll tell you when we get there. Well, how long is it going to take? You'll know when we get there. You'd ask all these questions to the kid, and what I kept getting was just these blank answers. And I was like, finally, one day I said, you know, if you just tell me where we're going and how we're getting and what we're doing, I'd probably stop asking questions and sit back and ride. First, he wanted to punch me in the nose, you know, being a smart-ass kid. But then the second thing, he goes, all right, so he tried it. He tells me, we're going to the lake. We're doing this. We're going to get there. We're going to stay for 3 days. I go, okay, let me know when we're there. More questions, right? I use that same approach with our investors, our shareholders, and our employees. I say, look, every Monday morning, this is what's happening this week. This is what the market looks like. This is what we're doing. This is the mountain we're going to climb. We're going to create a $10 billion company. This is how we're going to get there. This is your role. This is the environment we have. This is how we run our company. This is the branding we have. I'm constantly training on that because why? People will help a lot more when they know that they're useful, when they know they're important, and they also have the vision. And I think that's what's wrong with a lot of businesses that I have a lot of clients call me for advice. Hey, Troy, I can't get enough marketing. They're calling me for advice that I'm not even professionally trained in. But I just say, based on my experience, here's what you should do. And it's really about, sometimes the obvious is not really in front of you. Prime example. I go panning for gold. And I'm panning for gold, and I've been there doing it for 10 years. And somebody walks up next to you and goes, you've been panning for gold. How's it turned out? Well, I make enough money to pay the food and the kids, and it's rough, but I'm going to find that big rock one day. And the other guy walks away and goes, you know, there's no water downstream, and they got a bunch of crops. What if I go buy the water rights, and I turn the water, and I make it go downstream? That guy's panning for gold, hoping he finds the one nugget. I just want to control the water flowing over his nugget. And so the guy that makes all the money goes and buys the water rights and doesn't care about the nuggets in the river. I think that's the reality. Sometimes the actual answer is in front of you, and you either are not paying attention, you're unaware, or you haven't trained yourself to look for the unobvious. I spent all my time looking for the unobvious, 24/7.
Well said. It's funny. I heard something recently from two things. The first one was Mark Zuckerberg, where he was talking about when building Facebook that a lot of people were like, well, why don't you do this? Why don't you do this? Why don't you do this? And he said, you know, when you're in the picture, it's hard to see outside the frame. Not all things are obvious at the same time.
Right.
Another thing, too, is I interviewed the former CEO of Netflix, Mark Randolph, and he said that when they were starting Netflix, although now, you know, they're this behemoth of a company, and, you know, their pricing model where they became successful was unlimited videos for $9.99 a month. And he said, Omar, you know how many pricing iterations we went through with the board and all the executive team? 18. It took us 18 iterations and combos of ideas to realize unlimited videos, $9.99, right? It's so obvious now that that's the perfect business model, right?
Yep.
So to speak, before the competitors. But he goes, at the time, we were racking our brains. Should we have tiers? Should we have it free for X amount? Should people just pay a one-time fee for the annual? Should we have some DVDs and then some visuals? Should we do it by category, right? And so he talks about exactly what you're saying, is that it's all about business, it's all about finding the obvious, because people don't have business problems. They have personal problems that reflect in the business. And so the perfect business is really simple. Us complicating it is the issue, getting out of our own way. So I love that you sort of shed some light on that too. It's very insightful.
The thing I've learned in business is if you always think about the end game first, you'll always have the right solution. And the end game is, where do you plan on ending up? So one of the greatest rebounders in the NBA was Dennis Rodman. So they had a documentary on him. They were interviewing him. And I believe the way it went is he said, I don't ever find out where the ball's going. I find out where the ball will end up. So he studied every player the night or two before he played the game. He said, this guy leans on his back foot and he shoots with a flip of his wrist. And so he said, I don't care where the ball's going. I know where it's going. It's going toward the hoop.
Right.
I want to know where it's going to end up, because he has a tendency to spin the ball. He has a forward roll. He has a back roll. When he comes off his right foot, he puts too much pressure, goes this way. So he said, everybody knows where the ball's going. That's the obvious. I want the unobvious. That's why he was such a good rebounder. Business is the same way.
Anticipation is the ultimate power.
That's it.
How about for you in terms of, as you look at the landscape of where things are at? You know, obviously we're in a chaotic world with everything going on overseas. We have President Trump in office. We have talks of tariffs. You know, with all this chaos going on, a lot of people, whether they're just getting started investing or just getting started in business and expanding, are very confused. They're very scared. They're very uncertain about the future. What advice do you have for people who are looking to not just A, make money, but B, protect their money and invest their money based on what's going on in the markets? Like, for somebody who's clueless about anything other than downloading Robinhood and buying the new crypto meme, right, so to speak, what would be your advice on how people can start thinking about protecting and growing their money in such an uncertain time?
Stop listening to people like that get on Fox News and other media channels telling you false information that has no substance. So I was listening to Fox News this week, and Maria Bartiromo was on there talking about energy, and they were talking about drill, baby, drill, and she was commenting about, well, with President Trump, drill baby drill, price of oil is about what it was before Israel started the war. I listened to it as an oil and gas expert and having done this for 41 years. And I can tell you 8 or 9 things she said in that response was completely inaccurate, totally inaccurate. Now, this is supposed to be a leading financial expert on Fox News in the morning with millions of people listening to it. And they all walked away from there going, well, Maria said it, so it must be true. The advice I would give investors is it's just like going to a doctor, right? Well, I looked you up online. You seem to be the best neurosurgeon in town. There's only 2, and you're number 1 out of 2. So I'm going to have you do open brain surgery on me and try to pull that tumor out, and I hope I succeed, right? Well, that's not necessarily the best neurosurgeon. That's the best neurosurgeon in that town. I find that with the media. Whoever you happen to turn on, whatever your news feed is, you assume what comes out of their mouth is accurate. You assume it's truthful. And investors have become Google smart over the last 25 years. So before 1999 and the dot-com, when I was in business, you had truly professionals that understood stock market and bonds, and you had people that traded bonds, and you didn't have the internet. You truly had to know your business. Now you can get on and talk to AI and say, hey, what's the best stock to buy? What's the best bond to buy? And that's just a collection of what's already out in the open space, collected and then regurgitated, right? Mm-hmm. I told my investors 25 years ago, I said, you guys have all become Google smart. You want to do open heart surgery? You don't need a surgery. I will operate on myself tonight because that's what Google tells me to do. And the reason that's important is investors have gotten lazy. Entrepreneurs have gotten lazy. Give your money to a financial planner. Give your money to here. Do this, do that, do this. Buy Bitcoin, do this. And the true art of investing is like anything in life. I'm a better hunter if I actually get my gear, get my backpack, go out in the freezing rain, and spend 5 days on a mountainside looking for a goat. I really understand what the goat does, how he eats, where he walks, what it's like, what the weather's like. So when somebody talks about hunting goats in the mountains, I go, oh, I got that. We now have people investing in assets class. Remember Peter Lynch back in the 70s said, if you can't draw with a crayon, it's too complicated. Investors have forgotten that. Now they're Google smart. They're investing in things they have no clue about. They're investing for all the wrong reasons. All the basic metrics of investing are gone, and yet they're still doing it. So that leads you to believe, well, if you're a glutton for punishment and you keep sticking your hand in the hole and every time you come out with one finger that's less because something's biting it off, well, I can't help it. You put your hand in there 5 times, now you have a nub. Mm-hmm. Investors are not disciplined. They're greedy. FOMO's off the chart. FOMO. They're chasing Bitcoin like it's no tomorrow. Why? I got to get in before it goes to $1 million a coin. What do you own? Where is it? Where's your bank? How do you get it out? What if the electricity goes out? What if they put an EMP in the airspace and we knock out all the electricity for the western half of the U.S.? What if the stock market goes down? How are you going to get your money? That won't happen. Really? Tell me how it won't happen. So I think the investors out there, I'm talking investors from people buying companies, $100 million companies, assets, rich, not so rich, $5 million net worth, $100 million net worth. I think what I find is laziness. You're going to invest $1 million with a company. Did you buy an airplane ticket and fly out and meet that person? If they said they had a tank farm, did you go see the tank farm? Did you check the records in the courthouse? And it just blows my mind at how much apathy's out there from investors. And that includes new business ideas. Mm-hmm. Hey, I've got a new idea. Well, really? Well, what money are you putting in? And show me the bank deposit and the idea. So I think it's like everything else in life. Mm-hmm. The same 80-20 rule applies. It will always apply. But I think for the absolute excellence, for the superiority in anything you do, it's not an 80-20, it's a 95-5. Okay? We got 22 million millionaires in the United States. Most of those, over half of those came in the last 14 years because of the .com, because of the stock market and real estate, and we haven't had an economic bust in 15 years. You could be an idiot the last 15 years and probably make 30% in real estate and stocks. So the 80-20 now is more what I would call a 95-5. 5% have made their skills so sharp they can navigate any economic downturn or upturn, and when the market goes down, they actually come out of hiding and they're on the streets hunting. And the other 15% of that 20% are now losing a third to half of their net worth, and they don't know if they can ever come back or not. So I'm not worried about the 80-20. I'm looking at the 95-5. I want to be in the 5, and I want people around me that are in the 5, and I want to train those in the 15 to become part of the 5. It's the mindset. It's what your mind tells you every morning.
If you were to start from zero in today's world, how would you rebuild to your first million and beyond? And what are the things you'd be looking at, investing and growing into?
So I kind of have my own keys to success. One of them is really barrier to entry. I always want to figure out what market, what product, what service is in demand by the largest number of consumers, and it's the hardest to get into. because that automatically, if you can break that barrier, you now have a place in that industry, in that space. So
because if it's too easy to get into, even if there's a big market, everyone's selling hamburgers and fries.
It's like dry cleaning. Okay, I can go buy every dry cleaning here in Vegas, and a month later, it's like cockroaches. There's twice as many next month. Even though I own 100, they'll put another 100. The barrier entry is low. I need somebody centralized to clean my clothes, sell them for $4 a shirt, and I'm making money, right? It's like restaurants. Restaurants come and go because today I like your pizza, tomorrow I didn't like your pizza. Somebody puts a bad comment online. My business ebbs and flows based on the emotional experience of somebody eating a pizza. It's not a business to be in, right? So you want a unique business. You want a high barrier to entry. I also want massive market penetration. I want to know how many out of the 340 million Americans can I get to consume my product? So you look at Netflix, you look at Amazon, you look at Google. That's all they did. How do we get our product to virtually anybody that's in a normal lifestyle in America to use my product? That's why they're so successful, okay? I think the other thing is you need a lot of runway. So you can't be in a fad, right? So let's use COVID. So it's really, really hot to buy masks and gloves for 2 years. So I mean, people bet millions and billions of dollars on gloves and antivirus and antibacterial. And I got boxes back in the office. We're just dumping it because now it's age, right? So that wasn't a business plan. That was a niche. That was an emergency, like selling fire extinguishers when the blaze is going on, right? So part of being successful is, and this is the clue that I learned. This is the major clue. Let's say you're in buying, flipping real estate. I want to go buy a junky house, fix it up, and flip it. Well, that's great. But now you're on a treadmill. How many junky houses can you buy and flip? How long will the window be open? How long will capital costs be down? You really don't have a business. You have an idea and you're executing the idea. How could you change that idea? Well, maybe you recognize that the buy and flip was really based on what? There's a need for quality houses in a safe neighborhood that people feel like it's a great investment. Oh, it's not finding the one junky house in a nice neighborhood. It's building a neighborhood of cost affordable homes that apply to 99% of people below 200,000 income that need a house and want to buy a house.
That's that's 50x bigger opportunity.
Now you're solving a problem. You're not just flipping a house. And that's the way I approach my business. If I can't see a decade's worth of running room, it's not a good idea. And once you start thinking in that macro idea, you're no longer doing a deal or a project. You're now saying, I'm building a future of 30 to 50 years, and I'm going to incrementally grow that idea by deploying execution, ideas, surrounding myself with the top, smartest people I can know. I have a business model that says we're going to climb the mountain one stage at a time, like climbing Mount Everest. But if I do it each time, we get acclimated, we build, we shore up. You create that plan. I don't care if you're let's say I'm in the fence business in Vegas, right? I can go out and calculate the number of new houses, the old houses, the city ordinance. I go, I'm only going to build this many fences in Las Vegas in the next 20 years. You can literally calculate your income for the next 20 years based on statistics. Well, that's not a really good business. How do I supply fencing material to every big city in America, and how many cities have that same kind of exponential growth? So I don't want to build fences. I want to be in fence supplies. Yeah, that's the difference between being a super successful entrepreneur and somebody that has a nice job that makes $1 million a year, and you have a house and a play toy, and you now have a finite financial goal to your life.
Yeah, it's beautiful you said that, actually. I was speaking with one of my pop's best friends. He had a pillow business early on. He came from very humble beginnings, and he started his own pillow business. They were doing $2-3 million a year, but it took him like 5-6 years to get there. And then he struggled and plateaued for 2-3 years. And then he realized, shit, instead of selling my own pillows, why don't I just supply all of the different competitors? So he took it from that in 2 years, took it to a $30 million business. And he goes, it's just exactly what you're saying. You're solving the same problem. You're just creatively doing it at scale. And so a lot of times it's about seeing the bigger opportunity, kind of like you said, being above it more so than being in the trenches.
Like the guy watching the guy panning for gold. He stood back and said, that looks like a lot of work. How much success you had? Well, I find enough powder every 2 years to pay off my groceries. And he looks back and goes, the water's more valuable than the gold. I'll take all the water.
And the funny part you say that is that because that might be more work up front to get the water working, but then once it works, it's way easier. That guy told me that he made 10x the money, but he only worked maybe a fraction harder initially. Correct. It was actually way easier because now he's, instead of hunting for accounts and competing with people, now he's the permanent supplier. And because he was a competitor, he knows rates, he knows consumers, he knows timelines, he knows the pain points that they're going to want to hear and how to undercut competitors. So he was able to solve that at a bigger opportunity.
And what he also did, which was very smart, is he had his competitors say, now I have to be part of his distribution because 9 of my competitors have joined him. So if all 10 are here, it's why car dealerships have 12 car dealerships on a block. You think to yourself, well, how many car dealerships do you need to be?
That's a good question. Why is it the case? Why are so many dealerships?
If I'm going to shop for a car, I need a car. Basically, people shop for a car because they need it. Car gets too old, they got to have a car. Or Now, I need a bigger car, so I'm having kids. When they drive to a location with cars, maybe they don't like that dealer. Maybe they don't like the inventory. Well, they're looking for the next easiest day because that's a 1 to 2 hour trip. So if I put 10 dealerships on a corner, now it's just whether I want a Hyundai or a Toyota or a Ford, but I'm going to buy a car on that dealership. So every other competitor, like the Pillows, has said, I've got to be in that distribution center because when they need one, I'm one of 10 choices. If I'm not there, I'm zero choice. That's why car dealers do it.
If you were to restart in today's world and you couldn't be in your current industry, what industry do you think you'd get in with the biggest opportunity?
I'd probably be in land development. 100% raw land development. I love raw land development.
Why?
It's always limited. It's a very tough barrier to entry, not only in terms of cost, but regulations, permits, easements, and stuff. But it never goes down. So even junk land, even land out in the middle of nowhere, used to be $100 an acre. Now it's $500 to $1,000 an acre, right? And what I like about land is it's never going to be replaced again. So I like raw land. I buy raw land. I have lots. And for me, it goes hand in hand with my normal business, which is oil and gas, because it has the same parallel, right? Here's an oil and gas lease. No oil's been found. I can go buy those minerals, lease those minerals really cheap. But once somebody drills the first well, it might triple, quadruple in value. And as it continues to mature, it gets more and more valuable. Well, I can look at raw land over here and see a 100-acre tract at this intersection. I go, well, it's $10,000 an acre. That seems like a lot of money. But if I can muster the capital to buy that and I entitle it through easements or annexation, now all of a sudden that corner is a Home Depot, I've 10x the value of the rest of the land. So what I like is I like any industry that gives me unlimited running room, minimal regulation and controls. I want massive consumer acceptance, meaning that you got to have oil and gas, you got to have land, and you can just look at how Vegas is growing. You look at any major metropolitan. Hell, where I live in Dallas, Dallas is going to be at the Oklahoma border in the next 10 years. It used to be scrub brush for $2,000 an acre. Now it's $65,000 to $100,000 an acre in the last 10 years. It's insane. So I like anything that has a macro running room and has unlimited customers and really has got a 90+% consumer absorption or utilization. I like that.
No,
go ahead.
Go ahead. You're going to elaborate?
I was going to say the key is finding that arbitrage.
Yeah.
So most people could, like I said, can stare at it and have no clue, or they go, I don't know how to get $2 million. See, you just limited yourself. See, I always start. This is what I tell my team. This is something for all entrepreneurs. Watch this. No matter what your problem is, new IT, new marketing, new anything you're doing, just say to your team that you trust, let's start with the objective. Money is not an issue. How do we solve the problem? Because we can't afford that. We can't do that. It's too much for marketing. It's $2 million. Forget that. Let's say I just became the richest guy. I became Elon's favorite person. He donates his entire net worth. Money's not an object. How would you solve the problem?
Right.
And then what happens is when you take that money factor out, now you think smartly about, is it the right opportunity? How do you maximize the opportunity? Where do you go? Most people limit their thinking based on dollars and cents. I always say money's never not. You know, this is a statement I hold and it's true as day. Finding a good deal is almost impossible. Finding money is super easy. You can find all the money you want. The better your deal, the easier you find money. So people misunderstand that. The reason you can't find money is your deal has flaws. Your idea has flaws. Your idea is risky. But the money is easy. A good deal is darn near impossible. And that's the truth.
What do investors look for when making financial decisions, especially at the levels that you've been involved at? Obviously, they want a return on their money, but what's really underneath that? Is it a guarantee, assurance, a safe space? They don't trust themselves with it, so to speak. What is it that investors are mostly looking for when they're investing $1 million, $2 million, $10 million plus?
I would divide that in two categories. In the last 15 years, it's been FOMO. It's been greed. They somehow have convinced themselves if it doesn't say 12 to 20% IRR, they don't want to do it. Okay, and that's the reason why they're all involved in billions of dollars in Ponzi schemes and losses, because they weren't worried about preservation of capital. They were worried about greed. Like, oh, my portfolio did 16% return, yours made 15. So the FOMO has been all these fake masterminds and all these so-called groups that we're bringing everybody together. We're going to vet all these assets and investments when really they were behind there getting kickbacks and schemes, right? And so these investors said, I'm not doing my own homework. I'm not going to do the due diligence. I'm going to trust the shepherd to lead me as a sheep into his corner, and he won't hurt me. He's my shepherd. He's going to skin you and wool you, take all your wool off and go sell it for a profit. You're going to be left naked in the woods. And so I think that's the number one problem, is that investors have gotten lazy. And I think the second thing is there is so much in the way of people that are trying to skip the hard work. So instead of starting at 30 years old and saying, I'm going to build myself a net worth by the time I'm 50, They want to be a millionaire in a year. They want to be worth $35 million in 10 years. They want to be worth $5 million in 2 years. And so instead of trying to build a net worth like truly a bunker with a solid foundation, they're like, I'll try this and that and this and that. And they're either going to win and be the lucky winner, or they're going to be completely obliterated. And I think that's the biggest problems you have right now with investors. They just have forgotten the fundamentals. And it's extremely alarming, and it's very obvious because you ask them basically like, well, you invested in that deal. Well, what do you own? I don't really know. Well, who's got your money? Oh, I don't know. Where's your information? I got to look that up. I don't know about you, but I know where every dollar I have is. I know who I've invested with and what I'm in. I don't just throw money out to the wind. And when you throw it out the window in the wind, it blows away.
What's the biggest misconception you think most people have about money at the million and $1 billion level?
They think money's going to buy them freedom. I got to tell everybody this. Out of my investors, 2,300 plus millionaires and growing, I'm going to say 75% of my investors look miserable. No, they do.
What do you mean?
They're not happy. They think they're in a race that somebody's going to put a marker on their gravestone that says, here lays the $10 million net worth. Here lays the $50 million. Here's the guys that lost 40%. They're over in the $4 million net worth. It's like they're all playing this game like somebody's going to give you a trophy right before you take your last breath, and forever you're going to be on a specific gravesite that marks your net worth. To be honest with you, if you can't be number one and you can't be Elon Musk, who cares about number two? I don't know. It changes every 5 minutes, right? And so I think the reality is with these investors is they're not living most 90+% are not living the life based on the money they make or the net worth. They're too busy being greedy and penny pinchers. They don't enjoy their money. They're saving for the wrong reasons, and somehow they think it's their moral duty. And I saw this back when I first started, back in the late 80s, like 1986 or 87. We're coming out of this big crash in the early 1980s, and I'm going down the elevator, and I'm listening to two old guys on this elevator, and it was just stark to me. I'm like 21, and I'm on like floor 6. They're on like floor 8. They come down, and I jump on the elevator. And this guy's probably 65, the other one's probably 67. He goes, Johnny, it's so great you and Ethel are going to finally get to travel and do all you wanted to do. And he's kind of leaning up against the elevator. He goes, yeah, we're going to travel and just really have a good time now that I'm finally retired. I get down to the first floor. I'm walking to the parking garage, and in my brain, I'm going, that old fart ain't going to last a year. I mean, his travel might be across town. So you've waited your whole career to finally travel with your wife? That will not be me. So immediately what I did, I'm reading magazines, I'm self-teaching myself on investments, and I'm thinking, I'm going to do the right thing. I'm going to put money in the savings for my wife and I and my kids' college. I'm going to do all the right things, insurance, annuity. But after that, I'm living life. I see 75% of my clients not living life. They drive 5-year-old cars. They live in the same house they've been in 25 years. Like, well, we don't need a new house. Really? Your roof's falling off. It's not being disrespectful to my partners. It's like, why the hell did you make the money? Because I get to see their kids come in when they pass away and like, hey, my dad's dead. Where's his cash? I need to cash that out. I'm heading to Europe and I'm buying a new car and I got a ranch I bought over here and I'm gone.
How common is that? Kids who, when they inherit mega wealth, actually keeping the legacy going versus blow it?
I have 2 clients in 40 years that still do what their parents did, investing with me and consider energy investments. I'm going to tell you, it is like 98% of the time is, where's the money? How do I cash out? I don't want to invest anymore. I just want the cash. They didn't learn what their parents did. They didn't learn their business. They didn't learn how to invest. We talked to the kids and we're like, did you not go to any meetings with your parents? Did you not? I talked to my kids since they were babies about how to invest. It is staggering how that's why they say after 3 generations, the money's gone. A lot of it's gone after the 2nd generation.
They just squander it.
They don't know what to do. They never had to earn it. So here's what the problem is. If you didn't make the money, you live in fear. Okay, my parents left me $10 million. Hang on to it. Don't buy a second house. Put it in some annuities. Trust your financial advisor. Hang on to it, because if I lose it, I'm not smart enough to make it back because I didn't listen to my parents. So they live in fear of absolutely holding it. They choke it to death, right? And then by the time they give it to their kids really don't know how to make money because they've been spoiled by their parents. So their parents live a good life. They leave that money to the kids. Those kids go piss it off and buy cars and vacation houses, and they take trips to Italy and they're on cruises. It's gone. It is. We see it all the time. So I would say that the reality is 75% of my partners look like they're distressed, and I'm trying to tell them all the time, go buy you a new car. Go buy you some clothes. You're in the same damn shirt 3 days in a row at my conference. Go buy you a new shirt. They'll go to our conference and go like, this is the nicest hotel I've ever been in. I'm like, what? It's a $180 room at the Omni. What do you mean? I've never been to a room. I've never eaten at a restaurant like this. You're worth $10 million. What have you been doing? Well, yeah, I just don't want to spend the money. I'm like, why are you doing it? They're miserable by default. Either they've been guilted by their parents and post-depression and stuff. Then there's parents and there's partners like myself who go, look, I've done my duty and I'm going to go golf with my wife. I'm going to go take a vacation. I'm going to go to Europe for a month. I'm going to go buy a new car. They're incredibly happy. But you know what I find? Those happy clients actually make more money and they make smarter investments. They're not living in fear. I have so many clients, well, I should do that deal, but I'm just so scared I'm going to lose the money. Other clients like, I'm definitely doing that because that's a smart investment. If I lose it, I'm okay because I've also made 5 other smart investments.
And they end up doing even better. Yeah.
And the same thing happens in business with entrepreneurs. I have so many people come to me for business advice. I've got a great guy I know in Colorado. He's trying to expand his business. We've been talking for 5 years. Like, I know how to run the business. I know how to expand it, but I'm just so afraid of, people are such a hard people to work with in this. 5 years been talking to this guy, giving him a mentor. I finally just told him this last time. I said, I got news for you. Sean knows who he is. I won't tell you his last name. I said, Sean, here's the deal. Fish or cut bait. Just be happy you're going to be doing what you're doing right now for the next 10 years of your life. He's 50. I said, be 60. Stop talking about how you want to grow your business. You're more afraid of failing than you are success. When I get up in the morning, I'm getting up for 1 or 2 reasons. I'm excited about the day or I'm about to piss on myself. It's either pain or gain. Most people are more afraid of the pain than they are the gain. The 5% don't care about the pain. They can't wait to see the gain. And that's the differential.
Do you find that most people, when they become successful, I don't know if you in your case, essentially had to do things to sort of acquaint yourself with wealth, even if you were over leveraging yourself a little bit? I'll give you an example. From an aspirational perspective, I heard this video where Trump was talking about early on in his career, he had friends who weren't that wealthy, but they would, for example, fly first class or stay at hotels that were a little bit better, even if they were over leveraging themselves on cash or would go into debt a little bit to live a higher lifestyle, not with the intention to like splurge and just indulge, but they were doing it to level up their mindset, to become acquainted with what it was like to stay at the Ritz for a week or, go with their wife and rent the Rolls Royce or whatever it is. Did you ever do any things like that from an aspirational perspective where you over leveraged yourself a little bit to kind of touch higher levels of thinking or get familiar with higher levels of wealth?
I don't think you can hunt a bear until you know how a bear lives, what he eats, why he eats, when he's in hibernation, when he's not. You gotta experience what a bear looks like, hunts like, and eats like to hunt a bear successfully, right? How do you work with a millionaire, in my case as a young kid, how do you work with a millionaire? Do you know how they think? So I spent the first 3 years of my career at my own expense, back when you had paper maps, cell phones with a quarter. I would travel all over the country, and I go to these guys because I said, 1, I want to know what you do for a living. 2, I want to see you in your own environment. So you're a huge manufacturer in LA. I had a big client in LA. I said, I want to fly out. He goes, what for? I said, I'd love to know what you do. So I fly out to LA. I go out there at 6 o'clock in the morning. I go through his entire manufacturing plant. I see how he's interacting with his clients. I go, you do this every day? He goes, this is my money. This is my life. I must see what's going on to make sure I'm protecting my business, my employees' jobs. And so for me, when you ask about the ability to understand how millionaires think and the way they think, or understanding, the environment you're in, I had to go learn how to snow ski because all my clients went snow skiing. I'm from South Texas, from a poor family. I couldn't even spell snow skiing, right? My clients were taking cruises. I've never been on a cruise. I should go take a cruise. And so what happens is you do it for 2 reasons. 1, you do it so you can experience better things in life as you become more successful in your career, but you also do it so you can elevate your mindset. How in the world could you not go do something that other successful people do and not experience and go, but I don't understand why they do that? Well, you don't understand first class till you sit in first class and you find out the person next to you also grew up poor, built his own business from scratch, and you share stories and go, oh, and you got kicked in the teeth too? So did I. And you lost, oh, so did I. And now what you do is you start saying, my reference point is not the encyclopedia. My reference point is not going to the library. My reference point is by hanging around like-minded people with like-minded experiences, you began to create your own inventory of life experiences through other people that says, this is what it's like to reach the next level. How in the world can you ever expect to be good at what you do until you walk in the shoes of the person you're trying to either solicit, sell, or invite to be in your world? You got to walk the walk. Now, the excess is this. I call them 5-minute millionaires, right? And I say they're 5 millionaires. I used to say this back in the 90s in Dallas. I said, you'd pull up to a red light. This is back in excess in Dallas in the 90s. And you'd have 3 Mercedes at the red light, and they'd all have clocks in their back window. You go, well, what's the clocks in the back window for? That's the minute they bought their Mercedes. And the guy on the left bought his Mercedes 3 minutes later than the other. His is a newer car than those 3 Mercedes. They call them 5-minute millionaires. And if you really took away the majority of these millionaires' income for 90 days, they'd be broke. Millionaires.
Sometimes even less, yeah.
$3 million in the bank, got a job, I'm a doctor, lawyer, CPA, engineer, and I got boats and cars, my kids in private school. Okay, you've been fired and you don't have a job for 90 days. I don't have that much cash in the bank and I got to start selling some assets. We're seeing it right now. We're seeing millionaires like crazy dumping assets. I mean, great assets. They have no depth to their pocketbooks. We call them 5-minute millionaires. And so in a way, I was a 5-minute millionaire back in 2008 because I thought I had all these assets, all this money. When you get your oil prices dropping from 145 to 37, you get real estate taking a 50% drop, you're like, I didn't have enough depth. I didn't have enough money liquid to sustain a knockout punch, a roundhouse from behind my back. I didn't have enough. So I said, I can't ever do that again. You don't know what you don't know. But most of these millionaires out, these entrepreneurs out there, they get really proud of themselves. You know, they wake up and I make fun of people. Most of my partners know this. I'm kind of a smart ass. Yeah. They wake up in the morning, they wake up, go, good morning, Troy, you handsome devil, you so successful, brainiac, intelligent son of a gun. You are so sharp. Whoa. Yeah. Remember how Rush Limbaugh used to talk about himself? I said, Rush, I like your content, but I can't stand your arrogance, right? Yeah. But they do that because they've reached a goal where when they look back at the high school, they look back at college, look back at their parents, they go, I reached a plateau no one else has reached. Now I look at it completely different. I go, you know what? I've reached this plateau through God's grace, through tough lessons, through hard work, by learning how to surround myself with people who are much smarter than me. I've taken all the experience I've had, and I've created a really solid foundation to go forward. But every day is a blessing, and every day I got to think smarter. And I would say that most investors never do that. Most millionaires don't do that. What they do is they run around in their neighborhoods and their country club, and it's very rare when you should run across a millionaire and you think he's probably making 80 grand a year. That's the best millionaire you can run across. I don't like people driving Ferraris and stuff, not because I don't think they should enjoy a Ferrari. I want to see somebody who's successful based on humility and the recognition that they've been blessed. That is the most important millionaire to me. I love it.
Now, in your experience, just to touch base a little bit on, like, I love what you just shared, but I want to take a step back to what you were just sharing about getting in proximity to the bears, so to speak. Yeah. Early on in your career, like, what were some things on a tangible level? Like, for example, one of the best pieces of advice I ever got was to get into golf. And at first, I started golfing, and I was like, this is okay. I later fell in love with it and realized not just how many business deals go on there, but how many life lessons you learn on the golf course with guys who let loose, you know. So sometimes in the office, you know, they're so tight and tense, and I'm sure you know this too, is that some of the most successful people in the world, when you're negotiating big deals, a lot of times it's 80-90% of the conversations about your family, how things have been, all that. And then the last 5 to 10% is about that couple $1 million deal, you know, getting on the same page, and then obviously that evolves. But what were some things you did early on for maybe somebody listening who's at that early part of their career where maybe they're a little intimidated to do business with higher level people, or it's their first foray into it, and so they're trying to get into proximity of whatever it is. It could be the higher level groups, it could be golfing, it could be the country club. How important was that, and what were some things you did early on to get into those bigger rooms for bigger opportunities?
In my case, I did the one thing that no one did back in the 80s. I went and saw them. So no one wanted to go to the headache of booking a plane, renting a car, going through LA to find that address, using payphones without a cell phone. You had to want to get there.
And you were financially like able to, or was it a little bit of a stretch?
No. I was using, like, I had a paycheck of $2,000 and I was spending $600 out of my $2,000 to pay for that flight myself, pay for the car, the rent car, not knowing if the guy's going to stand me up or hate my guts when I got there. But I would go and they would ask me, so why did you fly out here? I go, well, do you have a lot of people come out and see you? Go, I've had no one ever come see me. They just want to sell me an investment. I never see them face to face. I said, well, how am I going to help you build wealth if I don't know who you are and what you do? And I'm a young guy. I'm not a millionaire, but I'm learning how to help millionaires become more successful. And so I thought the only way I can do that is I got to see the playground you're in. I got to see what your business is. I got to understand who you are. And that has been my motto for 41 years. So I just got back over the last 5 months. I've gone from Alaska to Florida to New Jersey to California, all over the country. And the comment I hear from everybody is, you're the chairman of the board and you came here to talk to 30 of us? Why wouldn't I? We've never had anybody come to Anchorage, Alaska to talk to us about this stuff. They were just dumbfounded. I go, why wouldn't I? So the humility part is, don't forget where you came from. I mean, don't act like you're poor. I mean, they don't want to give money to poor people, right? They want to know you're successful, but they want to know you're not in retirement. They want to know you still are the guy that's going to protect their money. They want to know as an entrepreneur, you're still out climbing mountains. You don't want to be this 80-year-old guy sitting there with a cane going like, yeah, well, y'all just climb the mountain and leave your money over here and thanks for doing business with me. That's not what people want. So what changed for me is I said, not only am I going to invest like them, so I invested in my own assets with my clients. That was big. Second thing is, where you at? And I'll come see you. totally shocked. I've been doing that for 41 years. I've been all over the U.S. for 41 years, and I like it. And the last thing is, it was about relationships. So like you said, and it's 100% truth, sometimes I'll go have dinner with somebody for 2 or 3 hours. We don't even talk about what I do. I mean, we literally get up in the conversation like I did with Mr. McCombs. You get up and they're like, why'd you come all the way here? Hey, check on you, see how your family's doing. Anyway, I'll be back in a couple months. Have a great Christmas. Have a nice Thanksgiving. Have a great birthday. Enjoy your summer vacation. I got a couple other partners on the way back. So you came out here. I'm going to give you this as a true example.
And this is a billionaire guy.
This is a billionaire partner of mine. We called him up one day and said, hey, my son-in-law, who's my CEO, we want to come up and see you and come spend the day with you. He's like, okay, what are you boys up to? Well, we're just going to come up and see you. So we fly all the way to Wisconsin. We go up to see him. And the entire day, he picks us up, and he shows his entire business. We were just done. His business was 20 times bigger than we thought. We had no idea he was this wealthy, right? Because he just plays it low-key. All day long, he's just looking at us with his eye like, what are you guys here for? So at the end of the day, we go to dinner, and he goes, all right, you two knuckleheads, cut it out. Now, what did you come up here for? And go, we literally came up here to see you. You've been a partner for 10 years. We've never seen your hometown, never seen your business. Came up here to visit you. He goes, okay. And so we left the next morning. He was standing at this far apart from us. One of our best partners, one of our closest partners. Love the guy to death. He loves us to death. He's been our partner. And I think what happened is he's so used to somebody always coming in with an angle or something. To him, it was, you so respected me. You took time out. You came here. You enjoyed the day. You saw my business. You had dinner, and you left, and you wanted nothing. That's how I changed who I was. I decided it's not about playing golf, even though golf is a good game. It's not about going hunting. I'm terrible. I'm ADD. I get about 2 holes in, and bing, you know. But I am the fastest second ball person you ever saw. I hit it in the brush. Second ball's on the ground. No. But to be candid with you, all this was about people are just trying to see how genuine you are. You know what attracts most people to me? I literally have Tourette syndrome. You ask me a question, I'm like, I'm going to give you the answer. You prepared for it. I believe I would rather give my money to somebody who offends me politically, socially, but is honest, delivers, has the guts, and does the job. I don't care.
Straight shooter.
I want to know who you are and how it is. And I think that's why I tell people either they love me or they hate my guts. There's no in between. I have a lot of clients go, I don't like your political views. Well, then you should invest with somebody else because you knew that when you started. And I tell millionaires all the time, take your money and go somewhere else. I don't care. Go elsewhere. Don't need your money. And what happens is you have to decide as an entrepreneur. This is more probably factual in what I believe in anything. Decide in life who you are and don't deviate. My father told me before he died of cancer, when he had cancer and he realized he couldn't take any more medicine, he said, I want to tell you something, buddy. Your voice, your word, your presence is powerful. Don't abuse it. This is about 3 months before he died. And I've thought about that ever since. And I go, you're right. I can sell ice to an Eskimo. I can sell you water, drinking water when you're drowning in the deep end of a pool. So the way I look at it is you stand for who you are and you don't acquiesce. You don't change the road. That's one thing I got to give President Trump about. That guy was facing jail. He was facing the worst of the worst.
Impeachment, indictment. Yep.
I don't know. He's got bigger balls than King Kong. The man never backed down. And I got to say, I respected him more by the way he just unbelievable tenacity. Just unbelievable. And I look at that and I said, that's kind of a message to all of us, regardless of the issues, regardless of what he was being accused of. It was, this is who I am. And I know I will not back down no matter what. I think that's you become a successful entrepreneur. I think it's like Elon Musk. Elon Musk is, this is what I am. This is who I am. Deal with it. Does he say stupid stuff? Hell, everybody that has money, that has a microphone says stupid stuff. I'm sure there's people going to look at this podcast and go, God, did he say that? I think the truth is the more you know who you are, the more you become part of the 5%. Because the other 95%, they're like a window shade. They're up, they're down, they're up, they're down. The light's in, the light's out, and they change as the temperature changes.
So I think it goes to speak that the majority of Americans also feel that same sentiment. They'd rather a straight shooter, even if they disagree on some topics, than to just have another, political face in there that's just going to, banter to
I think the world's going backwards,
opinion.
Omar. I think 7 years ago before COVID, we would have friends over for barbecues and we'd have the neighborhood in, and people are all about close relationships. I can't even think the last time somebody's invited us over for a barbecue. I can't even think of the last time I invited other than my family over for a barbecue. So I think what people have done is the last 15 years pre-COVID and then adding COVID on top of it, we've all now are building garages in the back alley where we don't have to talk to anybody. We don't have front porches anymore. We come home, we shut our door, watch Netflix. We don't communicate. And I think what's rare, what's incredibly rare right now is somebody who's on the front line, will tell you like it is, whether you like the message or not. You at least know you're getting the truth, you're getting who they are. I think that's coming back. And I think what people want, they want to stop these masterminds and this nonsense, these groups. I think what people are looking for now, they want real relationships. I want relationships, but I want real relationships. I think you're going to see less alcohol in the country. I think you're going to see less bar hopping. I think you're going to see people going back to playing horseshoes. You're going to see people going. I remember back in the 70s, 80s, we'd go to a family reunion. We spent all day long doing horseshoes and talking. And you'd start at 7 in the morning. It'd be midnight. You'd be playing games with your families. When's the last time you've been to a family reunion? Mm-hmm. I mean, we had family reunions every 4th of July. We were at my great aunt's house, and I don't care where you were at in the country, you were all expected to be there on the July 4th. There would be 200 of us, right? Mm-hmm. Haven't had a family reunion in 15 years. Yeah. The generation stopped. I think America is going to move back to that more meaningful generation. And I think for entrepreneurs out there, you better become more engaged with your customer. Like, let's say you own a restaurant supply company, right? When's the last time the president, the CEO, the VP from that restaurant company said, I'm going to drive out to that Allegro restaurant or that Johnny's barbecue place and say, I just ate lunch with you. How can I help you grow your business? See, I own a big pipeline company. First thing I did when I owned the gas pipeline company, I said, first thing I want to do is I want to meet all of our customers. So I went with our brand new team buying the company, and I went to every big customer, and I said, I'm the new owner. How can I help you grow your business? And the one guy, our biggest company, goes, I have never heard that before, ever, out of a pipeline company. They always want to charge us a fee. They could care less about our business. I go, no. I need you to make money. I want you to be successful. How can I help you grow? And he's like, I have not heard that in 20 years. So I think you've got to be realistic about where the country's going. We understand AI is kicking in place. We understand that technology is driving the force. What people are thirsty for is sincerity and honesty and real and communication and relationships. You and I will know each other for life. Whether we do another podcast or not, you call me up in 20 years, hey, Troy, this is Omar. Omar, what are you doing, buddy? How's it going? You create lifelong relationships, and those relationships are more meaningful than $100,000 in the bank account, more meaningful than any job or company start. I have guys I've known for 20, 30 years. They'll call me up 5 years. Hey, this is Johnny. What have you been out, man? It's so unbelievable, and I think that's what America's craving. I think the younger generation doesn't have that. If they're not bebopping at a bar, their depth of their relationships is so shallow. They're starving for it. I see that in our young employees. I see that in our young investors. They're 45 and they're like, I do it by myself. I'm a dentist. I'm a doctor. I'm an engineer. And my network is small. So I'm going to invest to be part of a group because I don't really have a big, deep group myself. Mm-hmm. They're trying to create what they don't have.
Yeah. I love that. When people say your biggest void is your biggest value. Yeah. And when people's biggest void now is deep, meaningful relationships, that's going to be what they end up seeking and pursuing the most. Yeah. What about in terms of here, before we wrap up, I have a couple of questions, is what about in terms of, Wayne Gretzky talks about, good players go to where the puck is, great players go to where the puck is going. Where do you see the puck going, best case scenario and worst case scenario, given the current climate, President Trump, what's going on overseas, et cetera, both as it relates to investments and otherwise, more so for entrepreneurs and people from a money perspective?
I think we're going to see the largest booming economy we've seen since the post-World War II. I think what President Trump is doing is lining us up for such an expansive economy the next 20 to 30 years is going to blow people's minds away. I think he has a different way of doing it. I think that what he's proposing is that for the last 60 years, we gave away all of our jobs and all of our technology and all of our labor force. We decided we were going to become a white-collar country. We wanted all the low-end labor jobs going to Latin America and Asia. And that came back to roost because what you did was you gave away your infrastructure. You gave away your core. So now we have people sitting on the couch wanting to make $20 an hour to run a kiosk. We become fat and lazy as a country. So what I see happening is he's going to give us some incredibly painful pills we got to swallow. Mm-hmm. He's going to raise the debt by $2 trillion. I'm not smart enough to know if that makes good sense or not. I don't like raising the debt, but I think what he's saying is I'm going to grow us out of this debt. I'm going to expand the economy so large, and it's going to be such an enormous value add that the dollar will stay strong, our economy will boom, and we'll pay off the $39 trillion by growing the economy between tariffs and actual more taxable income. I think he's also going to bring pride back to the country. So you have a lot of people who don't want to work because they've been getting paid not to work. Mm-hmm. So why the hell do I want to go to work when I've been paid not to work? Well, if you start creating a future and a vision, which I talk about, a vision where the country's going, people are going to change their mindset and go, I don't want to be on the couch getting free money. I want to help grow the country. And I think that's taking place. My view is if President Trump wins the midterms this coming November, we will hold the White House as a conservative party. And I say we because I'm conservative. We would hold a physically conservative White House for the next two sessions, meaning he'll finish his term, we'll reelect a conservative president, and that will carry for another 8 years, kind of like the Reagan-Bush era, right?
Mm-hmm.
Because I think people have finally have woken up, and it's always what they say, it's the money, stupid. It's the economy, stupid. He won because of the economy. And I think with the policies he's putting in place, people can argue about the debt and what he's doing, but what he's really saying is, I'm going to make America grow like never before. And unless you just don't want to be part of the winning party and the winning ticket and the winning economy, and you want to put your heels in and drag your heels, I can't help you. But if you want to be part of where we're going, this will be the biggest boom we've had since World War II. The second part of that is I think that he's not real happy with this globalization of the economy.
Mm-hmm.
So he's engaging Syria and other countries who've been left out and saying, how do you prevent war and conflict? You stop making everybody poor.
Mm-hmm.
You make Syria have money. When they have jobs, they don't want to fight. When they don't have a job, they want to fight.
Mm-hmm.
You make these other countries come back into more of a mainstream economic, and you stop isolating them, and then you stop having conflicts. We're not going to get there in the next year or 2 years. It may take another 4 to 6 years, but I think that's what his plan is. And I think at the end of the day, he's got a really big problem, which is we got massive debt he's got to refinance. So he's orchestrating multiple balloons he's flying in the air at the same time, knowing that probably 3 of them are important. The other 7 are more distractions. He distracts everybody who heard the 7. These are the 3 that he wants. I'm not sure which of the 3 he wants right now. I'm not that smart.
Mm-hmm.
But I can just tell you, for me, planning, I think oil and gas demand is going to go through the roof. I think the economy is not out of inflation. In fact, I think oil is going to drive more inflation. And I think if you look at it from pure economic standpoints, we never have come down below 5 or 6%. I don't know of anything you're buying cheaper than I did 2 years ago. I think they're trying to convince us inflation's gone, so we'll go keep spending, we'll keep doing this. But the truth of the matter is I think we're in inflation. I think, in fact, the oil price might send us back up to 7 to 10% inflation. It's going to be tough to beat. You can't grow the economy like you once without having massive inflation. You can't suppress oil to drill $55 oil when we need 65 to 70 to break even. We're just not going to do that. I think oil's $75 to $100 a barrel over the next 3 years. I think the dollar is going to plummet. That's the other part of oil. When the dollar goes down in value, oil skyrockets. The dollar this morning was 98.73. I think the dollar by December is going to be below 90. You start taking that dollar down, you come up with a wheelbarrow of $100,000, you can buy $100,000 worth of corn. All of a sudden the dollar goes down. Now you have to show up with a wheelbarrow and a half to buy it. This is all taking place. The problem is I don't think most investors are smart enough to navigate it. They don't know how to get out of the front of a moving truck. They're going to get run over.
How can most Americans capitalize on this?
If you can't see it, touch it, kick it, or feel it, I would be scared to invest in it. The stock market's only propped up because you have 50 million investors investing in, including my grandkids who buy Exxon stock. That's a market that's easy barrier to entry. It's also very easy to move. It's also easy to influence. So I think the way most investors should be thinking is, if inflation goes higher, what should I own? If the dollar decreases, what should I own? Because I think that's the 2 leading indicators for me. I think we're going to see higher energy prices and a lower value in the dollar. And you can Google it, you can search it and say, what should I own if that's the case? You should figure out what your core is. If I have a net worth of $5 million, I need this $1.5 million in home, furnishings, cash in the bank, and money market. This is my core. Should you increase your core up to $2 million, or should you say, out of the $1.5 million core, the other $3.5 million, what assets should it be in?
Mm-hmm.
I think cash is going to be king. I think if President Trump gets his way and lowers the interest rate so he can refinance the national debt, all these retirees, all these super conservative investors are going to see sub 4% interest rates. You can't live on 3.5% interest. Inflation is going to be 5 to 10. So it's one of these things where lower interest rates help us as a country refinance our debt. It's going to destroy those average Americans, teachers and retirees trying to live on that fixed income. They're fixing to have their income cut in half.
What about gold?
I think gold's a great safety hedge, but here's the thing. I think gold has only gone up because everybody's worried about inflation. And the truth is, I think Bitcoin's kind of become a parallel competitive commodity with gold. I can get in and out of Bitcoin faster than I can gold. And if I own $100,000 in gold, what semi-truck am I going to use to haul it when I want it? I truly think if somebody did an actuarial study about the number of contracts on gold, I think gold's a huge Ponzi scheme. There's not enough gold to honor the contracts. So if everybody said, I
dollars are IOUs, right?
Yeah. I want my gold not in a contract. Deliver it to me. We can't. Okay. There's a problem with gold. And I think gold's at $3,400 an ounce. Should it be that high? Well, it is. The market says it should be. Should Bitcoin be at 104,000? Well, the market says it should be, right? But where should it be if we have a stabilized growing economy? The dollar levels off at 90, oil's at 85, and now we have maybe Israel's behaving, maybe we stop the war in Ukraine, and everything goes. I can see Bitcoin back down to $50,000 a coin or lower, and I can see gold back down to less than $2,000 a coin. It's driven by fear. It's driven by currency concerns. It's driven by just a safe haven. Once you make everything safe, where does gold go and where does Bitcoin go? In half.
Mm.
Where does oil go? It's going to go higher. Oil is a different commodity. Oil is one of the only natural resources you have on the planet that every day we burn that barrel of oil, it'll never be on planet Earth again. I can take gold, put it in your teeth, put it in your watch, it's always present, right? Every time we burn oil every single day, that 100+ million barrels a day, it's gone forever. So the only way you get more oil, it's deeper and more expensive. You got to pay me more.
Do we know how much total oil there is, or the rough
Unlimited.
estimates?
Will never run out. Never run out. This
just-
peak theory is full of crap.
Yeah. It's
Look,
just,
we were out of oil 15 years ago. You're paying us $32 a barrel. All of a sudden, oil went to 150. Go, oh, no, we found another 42 billion barrels, right?
yeah.
So the truth is, in these shale basins where they're claiming we've reached peak production, no, we haven't. We've reached peak production because you've been paying us $65 a barrel and $2 for gas. So we said, take those 300 drilling rigs, lay them down. They're not economical, so we're drilling less wells. So we kind of plateaued. If oil went to 125, we'd grab those 300 rigs. We'd build another 300 rigs. We'd be at 15 to 20 million barrels a day in output. Thought you guys were out. No, do you dig a ditch for free? We don't drill wells for free.
Mm.
There's so much oil and gas on planet Earth, it's not even funny. But you could do an actuarial table and say at $75 a barrel, there's this much reserves. What if oil goes to $225 a barrel? Well, it's never going to go to $225. Watch the math. Well, it was at 32, now it's at 75. That's a 300% increase, right? What if oil did 300% from 75 to 225? Is that reasonable? Absolutely. So at 225, how much oil do we have? 5 times as much we have now. We're not running out. It's just economics.
It's just business. So 2 last questions I have before we play a quick game and wrap is, obviously you've had...
He's gonna tease me. Go ahead, man.
Obviously you've had so much success in your vertical and in your industry, and you're not stopping anytime soon. Like, I love that you talk about that. But my question is, when you look at the landscape of, for example, not just your business acumen of, where you got to here, but obviously a big part of what you do is help mentor a lot of people. You work with a lot of entrepreneurs. A lot of people ask you questions.
It's a passion of mine.
Yeah. What makes you so, that's why the show's called The Passionate Few. What makes you so passionate about sharing that with others? Obviously you have no necessarily financial incentive from it, other than the fact that maybe you were once the young man who was aspiring to be on this side of the fence, so to speak. So what makes you so passionate about helping people become more successful in their own life?
One day I'm going to take my last breath, and I'm between my family and my kids, my grandkids. I'm also going to be held accountable for what I did with my life. And they, like I said, they don't stick you in the grave and put you in the $10 million section, the $100 million section, the $1 billion section. You're just there. And literally after your immediate family passes on, nobody even knows who the heck you are, right? In my view, because I went through so much in 08, I kind of came out of that with a whole new appreciation about what my second role in life is. And that is to be that optimistic lightning rod, to talk to the homeless guy sitting on the corner with Walgreens and with a drug habit and talk to him about, call your mom, let me get you some food. I'm not trying to be a hero. I want to do it very quietly. It's about taking a young entrepreneur and saying, I just did this the other night. One of my partner's son has a business. He's been doing it 20 years, made good money. And I said, he was asking me about some advice. I said, well, give me a call. So he gets on the phone. He goes, why would you, so busy, Troy, why would you take the time to talk to a little pissant me? I said, I've been a pissant my whole life. I'm a pissant in the oil and gas business. I've been a pissant, uneducated with no college. I've been a guy who started from scratch. And if I don't take the time to help you, how do I not know you're a redwood forest with a great deal of might that you could grow to be this massive company and entrepreneur and create thousands of jobs, help thousands of families by giving you some mentoring? You don't know what seed you're going to plant. And what I want to do is plant as many positive seeds and entrepreneur seeds and mentor seeds and guidance seeds. I want to plant those seeds, hoping that one day when I take my last breath, maybe there's 10,000 people that find out I died, not because of ego, but they go, that guy gave me one piece of advice that changed my life forever. That probably thrills me more than the money that I make. That's an honest truth.
The impact, the contribution.
For me, it's my self-satisfaction knowing I've had a client 6 years ago, 5.5, 6 years ago, came to our conference and he looked stressed as heck, successful guy doing houses. It's back when COVID started. And finally, he's in this room where I'm having this entrepreneur conversation. We're all in there mentoring each other. And finally raises his hand. I go, yeah, well, what's going on? Can I share with the group what's going on? We're all probably 45 to 55 years old. He's 40. And he said, yeah, I'm building these homes. I guaranteed the construction cost, but because of rising prices, because of COVID, I'm not going to be able to finish those houses. I'm not going to have the money to finish them. I'm going to go bankrupt. So we talked for about 30 minutes, and I said, here's what I would do if I were you. Go to each one of your investors and say, I must spend $50,000 per house to lock in all the supplies and lumber now before the prices escalate. I need you to advance me the $50,000. I will guarantee the turnkey. I won't charge any more fee, and I will deliver your product even if I don't make a dime, but I don't want to lose your houses. He ran on the phone, came back about that night, about 4 hours later. I called every investor. They said they do it. I'm leaving your conference. I'm going home and I'm finishing the houses. To this day, he tells everybody, he goes, Troy saved me from bankruptcy. Now I've 10x my net worth. What he gave me in advice in that 1 hour saved my entire life, my wife, my kids, everything, because of that advice, right? Mm-hmm. When you hear that, that's better than the money I'm making. That's better than anything else because you literally changed the trajectory of his life and his kids' life, and you hope those seeds go out and do something for somebody else. Yeah. That's the exciting part about mentoring.
Yeah, success without fulfillment is the ultimate failure.
That is.
So you got the fulfillment component. All right, last question before we play a quick game at the end here is, when Troy Eckard is dead, gone, and nothing but a pile of dust, if you had, a 60-second piece of wisdom, I know you've got a ton of wisdom, but if you had to boil it down to a 60-second piece of wisdom for somebody out there watching this at any level of success, whether they're just starting or they've ascended to a new level, having experienced what you've experienced, what piece of advice would you give to people to stand the test of time? If you had to give them your best 60-second piece of wisdom.
Dream as big as you want to dream, but be willing to pay the price. Because there's a lot of dreamers who don't want to pay the price. The second piece of that advice would be, and I wish I had done this 40 years ago. I gave up drinking in 2017. I wish I'd never touched alcohol.
Why?
The lack of fulfillment I missed out on while I was drinking, going to bars, all the parties.
Sure.
When you don't drink for 7 years, and by the way, I stopped like that after 40. I just said, I'm done drinking, right? What I notice now is how much joy I have meeting people like you. It's not like you and I got to go have a beer after this podcast, right? It's not like we're going to go party in Cozumel. But it was the recognition that how much I missed the pleasure in life because I spent so much time either drinking or farting around with parties and going to bars, right? So the advice I would give is put your relationships at the top of your list between your family, your kids, your grandkids, your mom and dad. Make that number one. Because when you're 80 years old and you're sitting in that wheelchair in that nursing home and you got that smile on your face and you're just laughing, everybody's going to go, that old man is crazy. He's looping. No, I'm playing the videos and the rewind of all my life and the good things that I did. I dreamed big. I put in the labor. I left a legacy with my family. I did the right things. I mentored people. I had my faith. And man, I was able to pay attention to, I saw every sunset, every single deal. I haven't had a hangover in 8 years. You know how good that is?
Yeah.
Hangovers suck, right? And now that I look at alcohol, I'm like, God, it didn't even taste good. I didn't even know why I drank it, right? Mm-hmm. This, by the way, this is not an Alcoholic Anonymous deal because you drink if you want to. I buy booze for my kids. I'm making more of a relevant point. Being in the now is so important, and I wasn't in the now. Mm-hmm. I was busy just getting through life, even though I was successful. Now I'm in the now. Now I'm finding myself so much more broadly aware of what's going on. I walk around with a smile on my face. I'm listening. I'm observing. I'm like, man, life is so much more fulfilling today than it ever has been. So I would just tell anybody starting out, dream big, be prepared to pay the price, enjoy life as you're going because you're not promised tomorrow, and truthfully think about your other distractions like alcohol, addictions, or anything else, and just say, I don't need all that. Mm-hmm. I just want to be in the now. Life will be just off the chart.
That's beautiful.
Yeah, man.
That's beautiful, bro. And then before we wrap up, we play a quick game called First Things First.
Yep.
The way the game works is that we rifle off a quick word or phrase, and then you just tell me the first word or phrase that comes to mind.
Okay.
Make sense?
Yep.
The only rule is that you can't repeat yourself twice.
Okay. I'll try not to.
Ready?
Yeah.
All right. First word, how you define success.
Internal.
Biggest limiting belief you had to overcome to get to where you're at today.
That I was a worthless, white trash, broke guy from South Texas. That's more than one word.
Word or phrase that works.
Yeah.
Your first million.
Unbelievable.
Your last million.
God's blessings.
Best advice you've ever been given in business.
Don't cry like a little girl.
Worst advice you've ever been given in business.
Don't do it.
The hardest lesson you've had to learn in business.
I'm not the smartest guy in the room.
The best investment anybody can make.
Yourself.
What it takes to be a millionaire in today's world.
Humility.
Family.
The most important thing.
God.
Better than family. Without God, I don't have a family, right?
Yep. Failure.
Tough but necessary.
The biggest challenge you've had to overcome and what you learned from it.
that I was not that poor white trash kid, that I actually had a lot of talent, a lot of gift, and to give myself grace. I was harder on myself than anybody else, to give myself grace.
The hardest part of becoming a multimillionaire?
Staying a multimillionaire. It's a fact.
The biggest misconception about what it took to become one?
Misconception that once you get it, you can keep it. Making money is easy. Keeping it's incredibly tough.
And then the last part is, when you're dead, gone, and nothing but a pile of dust, what do you hope the Troy Eckard legacy is all about?
It's kind of a joke, but here lies the toughest, hardest working, most committed, crazy ass guy you've ever met with the biggest heart you've ever seen. That would be my epitaph.
I love it, brother.
Yeah, man.
And now, before we wrap up, where can people find you if they want to connect with you further, get in touch, or learn more?
Just contact my company, Eckard Enterprises. We got an 800 number there. You can call me. You can drop me an email at teckard@eckardenterprises.com. I will tell you, I'm pretty good. I answer about 99% of emails, texts, and phone calls because I believe you took the effort to invest to call me. At least you take the effort to respond to you.
Oh, man, Troy, thank you so much for being
Appreciate
on the show
it.
today.
Thanks again, brother. Appreciate it.
Absolutely. Guys, make sure to follow Troy. Check him out in the description down below. We'll put some links so you guys can get in touch. As always, live strong, live with passion, and go make those dreams a reality. We'll see you guys on the next episode. Thanks so much,
Thanks,
brother.
brother. Appreciate it, man.